This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in the fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
You know, Lisa, it's great. Damien Sassower waltzes in his music cues up. It's an amazing skill that he has to do that. And for the Burbs, Damien Sassower on short notice, Paul Sweeney with Alex Steele in support of a really important Bloomberg conference at NEF, and Damien's been kind enough to come in. Are you here? What are you here for? A week, 2 weeks, 3 weeks?
I'm here today and tomorrow. Yeah.
Today and tomorrow.
Today and tomorrow. Right. We're going to watch the VIX go to 30. It's going to be wonderful.
It's going to be interesting. We'll talk a lot about that. Yesterday, we were really restricted by a fabulous discussion of our international relations, the geopolitics of, let me get the list down here. I think we're going to do a little bit less of that, but thank you to everybody that checked in yesterday, particularly Elliot Ackerman and James Strivitas with my book of the summer with Chip War. 2054 is the name of their book, and I got to get to that. That's an important read right now. But we're going to get back to markets today, and we're doing it with Damien Sassower with a U.S. full faith and credit, 4.95%. Is EM showing the same angst that we see in full faith and credit U.S.?
Absolutely, Tom. EM credit and equities, which were up on the year, are now down on the year. EM equities specifically overnight on the back of some of the weakness we're seeing out of Asian equities because, my goodness, the Chinese economy, strong start to 2024, appears to be fading here. You know, we got some weaker activity data overnight, despite the fact that GDP kind of performed well, above 5%. It's just not convincing anyone that we're worth it through of it.
We'll get to this later. We're going to get to the start the show off. Lisa Mateo's over there. When do I get in? But seriously, on the currency front with a strong dollar, I just happened to look at Philippine peso, and I'm sorry, it's 55 to 57. It's weaker. Is there a destabilizing in your world because of what we see with strong dollar?
Well, the EM carry trade's been the big star performer this year, Tom. We talk about it all the time. And what happens in markets like this, when volatility ticks up, and by the way, the VIX is at 19 and change right now. When vol ticks up, it kind of filters over into EM, and that causes carry trades to unwind. And that's what we're seeing, a bid for funding currencies.
That's what we see here to get us off on 3 hours here. Drew Mattis to start us off.
Yes.
A strong year as well. Steve Chivarone from Federated on Your Next Allocation. We're on Apple CarPlay. We're on YouTube. We'll get to that. I'm going to get out on live chat on YouTube as well. We're in the Interactive Broker Studios and with your Bloomberg Business Flash, Lisa Mateo.
Good morning. Yeah, we've got red and green on the screen after the major averages ended with the losses to start the week. Right now we have NASDAQ futures, they're a little changed. Dow futures, they're up about 0.3%. S&P futures, they're a little changed as well. Over to the 2-year yield at 4.94%. That's up about 2 basis points. The 10-year yield at 4.64%, and that's up about 4 basis points. To commodities, gold. Citi says gold will hit $3,000 an ounce over the next 6 to 18 months. Right now, we'll check in with spot gold is at $2,372 an ounce. COMEX gold at $2,388 an ounce. As far as oil is concerned, we have Brent crude at $89 a barrel, NYMEX crude at $85 a barrel. On the economic calendar for today, reports on housing starts, building permits, and industrial production. And yes, earnings season continues. We'll start with Bank of America. They're down about 1% right now. Reported trading revenue for the first quarter that beat estimates. Then you have Bank of New York Mellon, BNY Mellon, up 2%. First quarter revenue topped estimates. It benefited from higher market values and also increased client activity. We're still awaiting results from Morgan Stanley. That's expected around 7:30 Wall Street time. We'll be sure to bring that to you. That is your Bloomberg Business Flash. Tom and Damien.
Lisa Mateo, thank you so much. We start strong here with a layout of the American economy, but folding it into investment strategy. And the hallmark of Drew Mattis's work, and this is from Maury Harris and the team at UBS ages ago, is the research note is very carefully written. That's what Drew Mattis does at MetLife right now as Chief Market Strategist. Drew, I've just got to start with the first bullet point because I think it says so much, and we saw it with our retail sales yesterday. Corporate profit strength never really left us. Is that the big fake of the next 3 weeks as we go, earnings are pretty good?
Well, it seems to be the case. We've been trying to figure out why the labor market's remaining so strong. That caught us a bit off guard. And it seems like the reason it was so strong is because firms could afford to hire people. Of course, when you look at a lot of the details in the economy, they're not particularly great. I know how the market's behaving, and I know what yields are doing, et cetera. But when you look at certain things, you'd like to see kind of a consistency in order to become confident, and then in order to kind of increase risk.
Right.
And that consistency isn't there, and that's, I think, troubling going forward. One case in point I'll give you right now is, tax receipts. Tax receipts, the U.S. government said we're going to be extraordinarily strong in April. That would affect bill issuance, treasury issuance. We could see a decline there. Tax receipts kind of look like they looked last year, so that there's not this kind of rapid expansion caused by the improvement in the equity market that we've seen. So, and if that doesn't happen, there are all kinds of secondary effects in terms of flows in and out of the banking system that will matter. And we'll see how that plays out over the next couple of weeks.
With Drew Madison at Life on YouTube, search up Bloomberg Podcasts to get out there and onto our valuable live chat, really intelligent chat. What I need right now, I need an intelligent question. Damien, dive in here with Drew Madison.
Drew, back in 2001, when we were at Lehman Brothers together, you were a senior financial markets economist. I was a lowly associate fetching your coffee.
Were you allowed to speak to him?
No, never. And here's the thing, Drew.
I saw Dick Fold once.
Lehman was the big bond house. You're talking about credit card delinquencies. Tom is emphasizing that point. Talk to us about spreads here. Why aren't spreads buckling here under the weight of some of the things we're seeing in the markets?
Well, I think it's the same that you see in the equity space. But, spreads are basically holding in. There's so much demand for anything that resembles an investment that what you're seeing is this pressure. And of course, you do have corporate profits staying higher. You have inflation, which is actually credit positive, right, up to a point. Yep. And so, I think people are pricing in kind of this Goldilocks scenario where we have just enough inflation that doesn't worry the Fed too much, but allows for an easier payback of all that debt that's out there. And then, of course, you look at profit margins and they're holding up. And so you kind of push them all together. And if you sprinkle in a little bit of productivity going forward, you have a pretty good outcome. The real question is, are you being paid for your risk appropriately? And I think that's a question people have stopped asking, in part because there's a little bit of almost fear of missing out in kind of the credit space.
So, Drew, I get the sense you want to talk equity. So is now the time to double down on growth, or are we shifting to quality here?
I have a problem with risk assets when we don't see the consistency, and when cash is paying 5%, right? So, what are you taking the risk for, and how much risk should you be willing to take to get that extra couple of basis points? And I think, that's the problem we're having when spreads are this compressed, when equities are behaving the way they are you really getting paid appropriately for the difference? And in my opinion, I see some signs of weakness in the labor market. They never panned out into kind of an overall deterioration in the labor market, but they're still there. You're still seeing some weakness in kind of consumer credit, particularly for kind of, lower credit-worthy borrowers. I think when you add those up, there are signs of weakness in the economy. They're just not enough to kind of offset this kind of juggernaut of corporate earnings and profit margins.
Tom, it sounds like Drew's getting a little defensive here. Real estate, maybe utilities, maybe those defensive beaten down sectors.
I did the math here. Damien, dive in here, but let me explain the math. And I looked at NASDAQ 100, and the answers were through 2 standard deviations, a little bit of gloom there, out of the very tight trend. It's a maximum drawdown of 3-point-some%, or maybe it's 4%. But it has been so long, Damien, since Drew Mattis saw a correction.
Yep.
He doesn't even know one is anymore.
Pimples and elephants. Drew, I wonder if you could just quickly talk to us a little bit about what you're seeing geopolitically here. Obviously, the Middle East, obviously Eastern Europe. How does that kind of factor into your calculus in terms of asset allocation?
Well, I think if you look at everything, every geopolitical flashpoint is inflationary if it happens, right? If something deteriorates from where it currently is. And if you look around the world, you'd be hard pressed to kind of put your finger on a part of the globe that doesn't have a geopolitical issue attached to it, that doesn't involve penguins, right? So, you pick a continent, there's a problem. That problem could be inflationary and has the potential to be inflationary on a global scale. So, from my perspective, that's another reason to be a little bit more cautious here. And it's one reason why I think, this idea that the Fed can hold at kind of the level of inflation we're currently at and just kind of wait things out. All the risks are skewed to one direction on inflation, right? We're not suddenly going to wake up and inflation's gone away tomorrow. And in that kind of environment, I think, the game that they're playing in terms of the level of caution is a tricky one.
Drew, we got to leave it there. Drew Mattis, thank you so much with MetLife this morning to get us started here. Steve Chiavarone coming up next. Red and green on the screen. Nice lift to the market. Fractional. Futures up 3. As Damian Sassauer mentioned, the VIX above 19.11. With our news in New York City, John Tucker.
All right, Tom, thanks. Middle East tensions may be ramping back up. Israeli military officials are saying they have no choice but to respond to Iran's drone and missile attack over the weekend. But the U.S. and European allies are urging Israel to avoid the kind of tit-for-tat that could spark a wider war. Here's State Department spokesman Matthew Miller.
Israel is a sovereign country. They have to make their own decisions about how best to defend themselves. What we always try to do is provide our best advice as a longtime friend of Israel and a longtime ally and partner of Israel. And that's what we've done since October 7th across a broad range of fronts. It's what we have done over the weekend.
Well, the Biden administration has put more than 500 sanctions on Iranian entities to hold Tehran accountable. And the turmoil in the Middle East has added new urgency to passing foreign aid in the House after months of inaction. Let's get that story from Bloomberg's Ed Baxter.
Speaker Mike Johnson is planning separate votes this week on new aid to both Israel and Ukraine. This in an attempt to assemble fragile coalitions to speed weaponry to both places.
We have terrorists and tyrants and terrible leaders around the world like Putin and Xi and in Iran, and they're watching to see if America will stand up for its allies and in our own interest around the globe, and we will.
Now, his party majority is very slim, and he may need Democrat support, and he very well may get it. The impasse over aid has been dragging on since October. Ed Baxter, Bloomberg Radio.
And the Supreme Court will weigh the legality of charges brought against hundreds of people in connection with the attack on the U.S. Capitol. The question for the justices is whether a law passed as part of the Sarbanes-Oxley financial reforms can be read to cover the January 6th riot. Hundreds of people, including Donald Trump, have been charged with obstructing an official proceeding. Global news, 24 hours a day, whatever you wanted with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Tom, Damian.
John Tucker, thanks so much. Good to have Damian Sassauer in with us with real expertise on EM. Damian, you know what you do with EM. You go back pre-1995.
Yeah, okay.
Because you're looking at the Asian financial crisis. And
I'd love to get some reliable data pre-1995, but I'm with you,
and
yeah.
I'm sorry, we're round trip over 20 years. Indonesian, what is it?
Rupiah.
Rupiah. Indonesia rupiah is basically back to the angst of 1998.
That's exactly right.
And IMF meetings coming up. I mean, nobody, including you, can ignore this, right?
It's not just the rupee. You mentioned earlier the Philippines peso. It's the Indian rupee. I mean, the high yielders in Asia are all getting crushed today, basically, because these carry trades are rolling off. And those are all high-yielding carry currencies within Asia, a way to kind of clip a little bit of extra coupon.
20 seconds.
It's not doing well.
Who cares about this?
I care.
I know you care, but
emerging market practitioners should care. Risk
care?
managers should care. Banks should care. And quite frankly, it's a precursor of things that could happen in DM. That's why you should care.
Okay, Damian Sassauer, thank you so much. What a joy to have him here with the world blowing up. DXY, 106.26. Yen is really not through levels. But there, we're on Apple CarPlay. Stay with us there worldwide. On YouTube, search Bloomberg Podcast. We have a live chat. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have little movement in futures. Dow futures, they're up about 0.4%, but NASDAQ futures, little change. S&P futures, they're just up about 0.1%. Over to the 2-year yield at 4.95%. That's up about 2 basis points. The 10-year yield at 4.65%, and that's up about 4 basis points. To currencies, we have the dollar stronger, Japanese yen weaker, euro, British pound stronger. Bitcoin is lower at 62,733. Now, today we have reports on housing starts, building permits, industrial production, and that follows yesterday's strong economic reading on retail sales. Also, words from San Francisco Fed President Mary Daly. She said there's no urgency to adjust those interest rates. To earnings we go. Johnson & Johnson down about 1%. First quarter profit beat estimates. Drug sales came in higher than Wall Street expected. And then we have United Health Group. They're up about 6%. Reported first quarter profit that beat expectations. Also affirmed its outlook for the year, and that's despite those costs related to their cyber attack. And then we have some news from Trump Media and Technology that's racing earlier losses. They're up about 2% right now. It says its social media network, Truth Social, plans to launch a streaming platform. That is your Bloomberg Business Flash. Tom and Damien.
Thank you so much, Lisa. Damien Sassar in for Paul Sweeney, which is a good thing. Lots going on the screen, and we'll get to that through the morning. This is a joy. He has arguably the most intimidating job in asset allocation on global Wall Street, because he has to put up every day with people like Linda Dissel and Steve Auth, who've been doing this for decades and decades. And the young whippersnapper comes in, and what he mostly does is take notes and comes up with really, really smart, dynamic solutions in asset allocation. Steve Chiaveron, thank you so much for joining us. I love, love, love the way you approach asset allocation. Which is the movable part right now that matters?
Oh, I think the part that matters is, we've been positioned, Tom, all year for a more hawkish Fed, so fewer rate cuts than the market. What we're contending with now, and the question at hand, is were even we too dovish with our kind of 1 and 2 cut forecast? Is it 0? And if so, that calls into question a number of asset allocation decisions.
Into earnings season, putting up with Steve Auth and other titans at Federated Hermes, into earnings season, what does free cash flow look like? Are we missing use of cash? We talked about it 3 years ago like it was religion. Are we missing a massive use of cash this time around? Witness J&J and United Healthcare this morning.
Look, I think first off, you've had an earnings inflection. And this is what makes this market hard to sell and makes us want to buy dips here, is companies are, earnings are inflecting higher at a time where rates are likely to fall. I mean, it may be delayed, it may be slower. And so both of those things are good for cash flow. And it makes parts of the market that should benefit from an economy that's stronger than expected. We've got a 2.6% GDP growth this year. And parts of the market that should benefit from rate cuts when they eventually come, they should start to participate. And they've been on sale for 6 months here. And so that makes us interested, despite some of the concerns that are out there.
Steve, we got to talk King Dollar here. I mean, you have to help me out. I mean, as a portfolio manager, math. It's the math. It's all about diversification. It's asset allocation. But when the dollar's going in this direction and it's all going one way, how do you diversify? How do you build ballast into your portfolio? I mean, you certainly can't go into non-dollar assets, fixed income or equity, can you?
Well, I mean, emerging market debt's been a good trade this year, right? As spreads were a little bit wider and have tightened, and that's something that we've what's that?
Past tense.
Well, the debt's been pretty good. I mean, it's certainly something that we've kind of leaned in through most of the year. I mean, I think the story here is that we do expect a broadening out from the strength of the kind of Mag 7, but we expect that primarily in U.S. value.
Yeah.
We expect to see that more acutely once rate cuts come in small cap. It's hard to make an argument here to be massively overweight international when you've got a scenario where inflation's behaving. It looks like those central banks are going to get to a cut cycle a little bit ahead of us. And we've got real questions as about whether or not a 5.5% federal funds rate is even restrictive in the United States. And so we just prefer the U.S.
You just made a great point. Central banks in emerging markets, Tom, they tend to follow the Fed, right? And so, my question here is, have markets gone too far in pricing in cuts in emerging markets? I'm thinking Brazil, I'm thinking Poland, Chile. Some of these markets, forward markets, are pricing in significant cuts between now and the end of the year. Mexico. I mean, Do we really think that some of these central banks are going to be able to deliver on that in the face of a Fed on hold?
I don't know if it'll be as dramatic as the markets expected, but when you look at the inflation trends non-U.S., they are much more well-behaved. I think the broader point on emerging markets is emerging market equities tend to do well when the Fed is cutting, when the dollar is weaker, and neither of those things are happening imminently.
How does emerging ginormous tech stocks do? I mean, I look at some of these growth, blue chip, U.S.-based growth portfolios. I mean, how much Meta Facebook can you own? How much NVIDIA can you own? What's the risk to our portfolio concentration now?
So, it's hard for a professional investor to own them at the index weights if you have any position size limits. For us, we're in this almost like it's a Cisco moment, but it's different, Tom.
Explain that. That's fabulous.
Okay.
I'm going to steal that.
So like that. You've got...
This is Sunday evenings, like 20 Mule Oval.
Here we go.
Whatever it was.
My wife's wearing her Cisco shares on her finger. I'm just letting you know.
Congratulations. My wife's ring came from the lumber aisle at Home Depot last year. She asked me to take her somewhere expensive. So you've got 6 companies that all killed their parents, right? No one shows you their MySpace anymore, and no one searches on Yahoo. And they all became prominent by figuring out the next big thing. And these 6 companies see AI, and they're asking themselves, are they going to be unseated by it? And they have more money than God, slightly less than the Catholic Church, and they're willing to spend all of it to figure out the AI thing. And so demand for what NVIDIA sells is huge. I think the one thing that's different between this and the pure Cisco moment is these companies know to sell it as a service, right? So whatever the solution in AI is, it's going to come with a monthly subscription.
Yeah, Damien John from Tiffany's just emailed in. He says, tell Damien he could have an NVIDIA moment anytime he wants.
Well, that's a good segue into my next question, Steve. Commodities.
Yeah.
Commodities have rallied big time. Gold has rallied big time, right? But what's really interesting is just last week alone, we saw a really big move in copper. I mean, now it's starting to spread into the industrial metals complex. What's the read-through into equities and other asset classes?
I think there's a huge secular story about the AI revolution, which right now has been all about tech, becoming a real economy story, right? Once you get to a factory that has fewer workers, that factory can be in the United States. And we have trains that can't stay on rails and ships that hit bridges and cars that fall through streets in Pittsburgh, PA. And so I think you've got, as you have this reshoring, this manufacturing renaissance, to borrow from Nancy Lazare and her theory, as that becomes more and more evident, I think there is an old school industrial build out needed in the United States. And you're going to see copper do to the U.S. what it used to do when we were talking about China growth.
Sounds like, Anaconda Copper and Steve Roth.
It's Anaconda Steel. Let's get around.
Yeah. Steve Chivarone, just brilliant. Thank you so much as well. Mr. Chivarone was Federated this morning. I look at it, Damien, and where are we fourth quarter? With barely a pullback in the market, I think people have really been sobered up here, and it makes even more fascinating the earnings to come after the big banks.
Well, for me, Tom, it's that high-frequency growth. I mean, like the PMIs, they're sort of starting to tick higher globally, so that manufacturing rebound sort of starting to extend into Europe and Asia. And the question is, does it have enough juice to find its way into asset valuations? The verdict is still out.
And, of course, China, front and center, folks, with a 5-handle on GDP, and it was the makeup of the 5-handle in that, we'll get a lot of good coverage of that.
Infrastructure investment.
Yeah, typical big industry investment there, waiting for the consumer to come on as well. But all in all, really, really fascinating here. And Damien, again, I come back to the heart of the matter. We've forgotten what a correction is.
Yeah, no,
we're supposed to go down 10%.
A correction is when the New York Mets go 8-3 after beginning 0-5 on the season. That, my friend, is a correct. They're 500 playing 500 ball now.
Yeah, they're fun to watch. I mean, they come.
I don't know about fun, but
I've been watching all the early teams here, and some are getting it done. The Kansas City Royals, I'm all over them.
We have some playing games out of the West in the NBA tonight. It's going to be interesting.
That will be interesting.
That'll be very interesting. Well. Lakers, Warriors.
Stay with us. On Apple CarPlay, I've got a great lineup coming up. But on Apple CarPlay, please look for the Bloomberg Business app. It is free, and you can download CarPlay from there. On YouTube, search Bloomberg Podcasts. That's the place to get us. And there's a live chat. It's very valuable. People suggest songs. How great is that? We're going to get satisfaction from that. Good morning.
Hits, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, futures, we've got green on the screen. We've got S&P futures. Well, that's little change. Dow futures up about 0.4%. NASDAQ futures, they are little changed right now. The 2-year yield at 4.95%. That's up about 2 basis points. The 10-year yield at 4.65%. And that's up about 4 basis points. Want to check back in with some of the bank earnings that we've had coming into today. We're just awaiting from Morgan Stanley at any moment. Bank of America, they're down about 0.1%. Bank of New York Mellon, they're up about 1%. And we have PNC, they're down about 0.5%. And in other news, buyout interest, that's fading over at Samsonite. Sources saying the private equity firms feel the price is just too high, and that's going to be clearing the way for a dual listing. That is your Bloomberg Business Flash. Tom and Damien.
Thanks so much, Lisa Mateo. Thank you for that. Morgan Stanley's out with earnings, and it's just simple. There's a nice lift here. We're watching the stock carefully. It had a little lift before, I think maybe off of Bank of America. Mr. Pick with his first headline out on the Bloomberg here, taking over for James Gorman. Institutional securities saw strength across markets. That's what CEOs are supposed to say as well. Here's a key statistic. Wealth management was $6.7 billion and came in at $6.9 billion. So on a first moment look, that's very constructive. Like Bank of America, they have a 3% rise. Maybe, Damien, they'll give it back as we look on. But it's a continuing story here that life goes on. You just execute over 90 days and good things happen.
You seeing any headlines on the layoffs that were supposed to come under Ted Pick? I mean, there were supposed to be quite a few of them.
But will they be subtle layoffs? I think this is a new thing. You saw the shock of Tesla layoffs yesterday. Yeah. Okay, fine, that's a managed layoff. But you wonder if they'll be more discreet here. In charge of discreet at CFRA is Kenneth Leon. Ken Leon's been doing this for years, and we're going to not only look at Morgan Stanley, but with Ken Leon, look across all of banking. Are the days over, Ken Leon, where they announce a 6% layoff? Or is everybody cuter about it now, 20 here, 10 here in Asia, et cetera?
Well, Tom, it's good to be with you. And, you know, these businesses are cyclical, so we can always see that as a scenario. But the narrative is not about going into recession, significant layoffs, or streamlining. It's about taking advantage of technology. And most importantly, today, with disappointing Bank of America results and probably very strong Morgan Stanley results, it's the capital markets that's going to give you outperformance.
I look at the capital markets, and to me, what's important here is on an employee basis, there may be layoffs, but they're going to rehire the same amount of people or more in other areas like technology and intellectual content. Is that what's happening?
It is. And even on one of the calls yesterday, they're talking about artificial intelligence, or AI, and how you can work that into processes of the bank, particularly the back office.
Sector dispersion is usually at its highest during peak periods of market distress, Ken. I'm curious, it's been abnormally high in U.S. equity since the pandemic. Talk to us a little bit about the role of sector allocation, diversification in the current environment.
It's a good question. And as a research director and looking top down, I'm thinking of the financial sector for listeners. There are 12 constituents. Berkshire Hathaway is the largest. The 6 largest banks are in there. They're 65% of the sector. So we're going to have a full week of bank earnings. But quite frankly, for your question, the most important one is the performance and outlook of the 6 largest global U.S. banks.
Interesting. So, rate-sensitive sectors, other rate-sensitive sectors, like utilities and real estate, are probably the 2 worst performing sectors in the S&P this year, I believe. Talk to us about those sectors. Do they stand out to you in the current environment?
Yeah, we have an underweight on those sectors, mostly because, we have the scenario of a very healthy economy. Yeah. And we think that looking out, even if we have a correction, and Sam Stover, our chief investment strategist, there's been 24 corrections since World War II, but they come back to regain those losses in 4 months. That's the average. So we'd like to be with growth, which is technology. We also like communication services and also consumer discretionary.
I look, Ken Leon, with the Morgan Stanley earnings, and I guess it comes down to the strategic difference, the distinction between Goldman Sachs with a bang-up effort the other day, maybe awful lot of gloom about David Solomon. Boy, he pushed that aside. In Morgan Stanley here, what's the distinction between Goldman Sachs and Morgan Stanley, and what does Mr. Pick show this morning?
Well, there's two things. First of all, what is the body language and really delivery of a new CEO versus one of the Hall of Fame, James Gorman? Second, I think, Tom, we're entering a very interesting period. I said capital markets is really going to drive these particular firms. But when you look at Goldman Sachs and asset management, it's their really closer link to alternative investments, private equity, and equity and debt financing. There is $1 trillion in business from sponsors still to be released into the market that will benefit Morgan Stanley and Goldman Sachs.
What do you think about this, Damien? What's your distinction right now between Goldman Sachs and Morgan Stanley?
Well, I mean, I think the interesting thing is, well, they're two very different banks right now. But
I agree with that. That's important.
And I think really for me, I'm looking at credit card delinquencies above pre-COVID levels, bankruptcies rising, housing activity in decline. So I take a little bit of your point, Ken, with the fact that this economy is completely healthy. I mean, talk to me about these recession odds. I mean, they've fallen substantially. Can the Fed really, truly engineer a soft landing?
I think Jay Powell's getting better in his messaging. He needs to be more Alan Greenspan, because when things are quite honestly working well, and I keep hearing from the financial media rates higher. Even at these levels, corporates are beginning to go to the capital market. The first quarter was a record for debt underwriting since 1980, and I think for the consumer, there are parts of the population that do suffer. But I think we're going to wait. There's no need to cut rates immediately.
One of the things that's important here, folks, is we await the Ken Leon 62-page annual letter. It's like James Diamond's letter. It's just Ken Leon. Ken Leon, what would you put in your 62-page letter after seeing these bank earnings, their reports on revenue, Moynihan's effort on digital? What do they look like 5 years out?
Wow. It's a great question. And I think what we'll see is that these banks are positioned to flourish and grow as we see innovation and change in the market.
You asked me a little bit earlier about what the difference between those banks are, and the way I see it is, net interest income versus wealth management. I mean, to some extent, right? And I'm talking B of A to Morgan Stanley.
A bank versus asset management.
A very big bank, though. And so my question for you, Ken, is talk to me about this curve. I mean, everyone seems to think the curve's going to steepen. That should be pretty bullish for Bank of America, for Citigroup, for JPM, no?
Well, Bank of America probably went 0 for 10 on the results today, but on net interest income.
Okay, we got to stop the show here. This is the second time you've mentioned this. Where did Moynihan fail today?
They missed it on net interest income. They missed it on wealth management. They missed it on investment banking. And on trading, it was just average compared to even JP Morgan Chase or Citi. So, but to that question, net interest income, they're getting pressure on cost of deposits. I went through the 60-page supplemental, and I'm just not finding anything to cheer about. And believe me, I look at all the key metrics.
Oh, come on. The solution, Ken Leon, is they got 212,000 people. They're going to go in there after they hear the Ken Leon report. How many bodies does it take to right-size Bank of America after a challenge?
In history for Bank of America, and I've been covering them 15 years, you do sometimes get quarters like that, and then they come back strongly next quarter. But they are one of the best in terms of their disclosure and explaining their performance.
Ken, not even equity trading? I thought equity trading beat.
It's very minor. It's actually equity trading is a very small component.
No, I'm joking. I'm looking for one silver lining in the report. I agree with you, Ken.
Ken Leon, thank you so much. Really, really appreciate this. Wonderful to finish all the series of Banks Strong here, and particularly Allison Williams. Thank you so much for leading our coverage. Mr. Leon is with CFRA. Red and green on the screen. Damian Sassar watching the VIX now through 19. A better VIX, 18.83. With our news in New York City, John Tucker.
All right, Tom. Israeli military officials are saying they have no choice but to respond to Iran's drone and missile attack over the weekend. This even as Europe and U.S. officials boosted their calls for Israel to avoid a tit-for-tat escalation that could provoke a wider war. We get more in Israel's possible response with Bloomberg's Ethan Bronner in Tel Aviv.
The sense that the United States is back again, embracing Israel and sharing in its defense needs and so on is important to people. It's the most important alliance that this country has. But, there's this kind of old debate here, which is, do we want to be loved by our friends or feared by our enemies? If we have to choose, we'll choose feared by our enemies. Now, the remaining question is hitting back the best way to be feared? And I think that's part of the debate, too.
That's Ethan Bronner in Tel Aviv. President Biden hitting the campaign trail in his childhood home state of Pennsylvania. Biden's campaign says the trip aims to highlight the differences between the president's tax and economic agenda and the policies of Donald Trump, who oversaw tax cuts for the wealthy and corporations. The 3-day trip includes a visit to Scranton and events in the Pittsburgh area. That's where Nippon Steel's deal to buy United States Steel has rankled union allies. The president will close out the trip tomorrow or Thursday in Philadelphia. And another body recovered at the site of the Baltimore Highway Bridge collapse. It was found in a construction vehicle underwater. Well, the FBI, meantime, says agents boarded the container ship. They're looking for any evidence of criminal wrongdoing. One of Copenhagen's oldest buildings is on fire, and its iconic spire has collapsed. The roof of the 17th century old stock exchange that was once Denmark's financial center was engulfed in flames. The distinctive spire in the shape of the tails of 4 dragons twined together reached a height of 184 feet. And finally, the flame that's to burn at the Paris Olympics was kindled today at the site of the ancient games in southern Greece. Cloudy skies prevented the traditional lighting. That's when an actress dressed as an ancient Greek priestess uses the sun to ignite a silver torch.
Lisa Mateo was shortlisted for that.
Yeah, well, she did it last year. They offered up a prayer to Apollo. Apparently he wasn't listening. Instead, she used a backup flame. And the lesson there, always have a backup flame.
Yeah. Okay. Right now, Paramount has a prayer to Apollo. That's what's going on there. John Tucker, thank you so much. John, of course, our surveillance congestion reporter. This weekend, I enjoyed both the West Side and the FDR here in New York. Are they going to become parking lots with the congestion tax?
Possibly so. At least that's the argument presented by the opponents, including New Jersey.
Yeah.
That case still in court, taking place in Newark. My question, I still haven't gotten this answered, and I have to take a deeper dive. When you come in to this, are you charged just once or every time you go through one of those?
Oh, they're definitely going to charge every time, John Tucker. John Tucker, our chief Greek mythology strategist. John, tell me a little bit.
I am now praying to Apollo.
Tell me a little bit about your parking garage of choice. Our parking garage is on 58th Street. It's just below the 60th Street cutoff. What's your plan?
Well, Damien, I have no plan. My plan is to throw myself on the mercy of those that pay my bills.
What's interesting here, folks, is this back and forth between Damien Sassower and John Tucker. They're actually living this. To me, it's like a joke. It's like, ha, ha, ha. Sweeney is on the train. To you guys, this is a real deal.
Yeah.
I mean, where do you park on 62nd Street and walk fine? That's great. But what if you work on 53rd or you work,
Well, what if they redirect you? There's a little bit of construction. All of a sudden, they send you a block around the corner to 59th, and you just paid $20 for no reason.
What does Bank of America do at Fortress Moynihan? There's a brilliant skyscraper.
They asked Jim DeBari for help. He's the man over there. He turns the lights on in capital markets at B of A. I would just ask him.
Quickly, John Tucker, what's the calendar on this?
I don't know.
Summer?
It's whenever the courts conclude, and it could be.
Lisa's nodding her head.
Could be well into the summer.
June, thank you.
June, but
June's busting out all over with congestion fees. We'll see. Raging debate here in New York City. We welcome you across the country and around the world. What you need to know: higher yields, the market churning. Of course, waiting for geopolitical headlines, international headlines out of Israel. Good.
Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now we have S&P futures. They're up about 0.1%. Same for NASDAQ futures. We have Dow futures up about 0.6%. The 2-year yield at 4.94%. That's up about 2 basis points. The 10-year yield at 4.65%. And that's up about 4 basis points. Over to commodities, we have spot gold lower at $2,373 an ounce. And we have Brent crude at $89 a barrel. NYMEX crude at $85 a barrel. Want to point out bank earnings. We'll check in with Morgan Stanley right now. They're up about 2%. And then we have in other news, Tesla reporting that the company's round of layoffs that will affect more than 10% of its workforce, well, it's already begun. Reuters saying it's hitting the U.S. and China as we speak. And then layoffs over at HSBC. Sources saying it's going to cut about a dozen roles in its investment banking division over in Asia. And finally, some tension at Stellantis. Its CEO's $39 million pay, drawing concerns from investors because they're taking job cuts as the Jeep maker transitions to EVs. That is your Bloomberg Business Flash. Tom and Damien.
Let's wrap up the script here. Damien Sassar with us, Paul Sweeney, with Alex Steele at a Bloomberg NEF soiree. We'll have much more on that as we go into the morning. Damien, you're sort of living the commute, living the life large. He's got the romantic weekend I don't have. Teslas, they're everywhere. I see them constantly, almost like I see Toyotas, and yet what a troubled story. What are your thoughts on use of Tesla?
You know, they scare me because, I don't hear them coming. And, I'll be walking on the street. All of a sudden, these EVs come up behind you. And I'm like, it sounds like a cat purring. I'm like, oh, my God, So, but anyway, look, Tesla's a rare breed. Obviously, the layoffs are going to matter. I'm interested to kind of see what that means for some of the conversations that are happening between Olaf Scholz in Germany and President Xi Jinping in China. Because as we know, they're being accused of dumping specifically in EVs, into Europe and into the U.S. for that matter. And we're going to see whether or not there's any progress there. I doubt it. But it seems to be that Europe's ripping a page from the U.S. playbook.
Can Tesla go into Europe, though? And that's the real point there.
Yeah.
I can't say enough, folks, how this is a partition between the U.S. view on EVs China and the German view on EVs China. It's a raging debate in the background.
They're going to have to compete with the Euro auto manufacturers, and they're not going to let them in easy.
We'll have to see on that. Futures up 11.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
A daily look at the front page is a stack of newspapers at the desk of Lisa Mateo. It's brought to you by Interactive Brokers. Interactive Brokers, they charge dollar margin loan rates from 5.83% to 6.83% rates. Subject to change. You'll learn more at ibkr.com/compare. She's fired up. She's got a whole list of twisted stories here. People love this or they hate this. People are like, can you just talk about Japanese yen? And I'm like, come on, Lisa's got some jewels here. What do you start with?
All right, this was on Bloomberg. This has been going on. The U.S. preparing for an antitrust suit against Live Nation over Ticketmaster. So this Live Nation Ticketmaster whole situation has been going on for some time. Sources are saying they want to force Live Nation to spin off the Ticketmaster ticketing business. The agency's been investigating that entertainment giant for years, so it's been going on. The reason why, well, there's concerns Live Nation illegally tied its concert promotion services to use on Ticketmaster. But these two companies emerged like 14 years ago. After this lengthy antitrust investigation, they both agreed that they wouldn't tie those services together. But now they're saying, well,
I've got a really strong opinion on this, Damien, before I voice. What's your thoughts on Live Nation?
Well, when we go on tour, what does that mean for us, right? We're not going to be really reaching our true audience out there. You on guitar, me on the bongos. So, I'm a little, I don't know. What are your thoughts?
Here's my thoughts on this. This is all about the artists. The artists want to feel that they're being an egalitarian, and I'm going to have a $80 or $100 ticket so the people can come see me. And the demand for some of these acts is not $80 or $100. It's way, way higher. It's just an artificial auction theory because the demand is way, way higher to see Pick the Artist, but the artist doesn't want to visibly show on Ticketmaster a $480 ticket.
Try getting tickets for U2 at the Sphere or Billy Joel here at MSG. There you go.
The Taylor Swift tickets.
Swifties,
I take this back to the artists. I take it right back, and they're representatives. They're artists, and It's a mess. I mean, and what's there going to be? Litigation out of this, Lisa? Is that the basic
That's
idea?
what they're trying, antitrust suit, yep.
Okay, what do you got
We'll
next?
see. Bubble tea. Have you ever tried it? Either of you?
Oh, God.
No, the
Don't
milky
know. I didn't know you
beverage
were
with the
doing
tapioca
this.
bubbles in it? No. I haven't tried it. The kids love it.
Oh, really?
My Apple Pay goes, I don't even know how much I spent on this for my daughter, but here's the thing. So the market for it in China, competitive. They're fighting for customers. But now they want to start to bring them, here to the mainland, to different areas. You have a company like Cha Panda. They're looking at Southeast Asia. They're looking at opening a store in South Korea a few years ago. You have Haiti. They opened up in New York in December. So they're starting to trickle in. A few companies planning IPOs in the coming months in Hong Kong. But they're saying that they're going to start rivaling coffee chains, that it's going to be this battle between the coffee chains and the bubble tea.
This is, my bank does what did you spend during the year? You get it about now, for 2020. Bubble tea was number 8 on my list.
I'm telling
I
you.
don't even know this. I mean, the fights block to block on the Upper East Side on bubble tea. Have you ever had it?
I've tried it. It's too sweet for me. I can't do it.
It's basically sugar and tea, right?
Yes.
Am I
and milk.
narrowing it down? And this is cherubs out the door. It's
Long
3 p.m.
lines, yes.
Long lines.
Yes, and they're addicted. They're in the malls. They're overtaking. They're just going.
Where's
to different
Starbucks
stores in
on
the mall.
this? I don't know.
That's what I'm saying. They're going to start rivaling in with the coffee chains. So we'll see how this battle goes. I don't know. Do New Yorkers like their bubble tea or their coffee? That's the question.
Or their strawberry lemon refreshers.
The cherubs like their bubble tea.
They do.
Let's move on. This is too painful.
It is. Okay, here's a new trend for you. Longevity vacations.
Yes.
Okay, this is the trend. People are dishing out big money. We're talking about $1,200 to go on vacation and get ozone therapy, or to $1,800 to get early detection cancer tests on their vacation.
Wow.
And it's really, really going on. Resorts are starting to go to it. Resorts can now find biological age testing, poolside vitamin IV drips, stem therapy. This is all happening for
This
a
is
big
so Damien
price.
Sassower.
I mean, shout out to Dan Weinstein, Restore Hyper Wellness, IV drips on vacation. You don't have to go to vacation to get your IV drip. You can do it right in Westchester County. Restore Hyper Wellness, Dan Weinstein, shout out.
Is there such a thing as a Tang drip?
Tang drip. You need one of those.
Okay, but this is the.
No, in all seriousness.
I don't have the guy in front. Yeah, in all seriousness, there's a lot of people with a lot of disposable income into this.
Taking red light, they do cryo there. You go into this freezing chamber. I've not done any of this, by the way.
Bloomberg Intelligence has a cryo thing.
It puts years on your life.
Gina Martin Adams is in there 3 days a week.
Wish.
Are you done, or is that
No,
it?
this last one's a zinger. You're going to love this one.
Oh, thank you.
This
More bubble
one's-
tea. Can't wait.
No, this is from the New York Post. So apparently there was this blog post on X from a tech executive who's saying he spoke to a guy who admitted to spending $10,000 a month on AI girlfriends.
Oh.
Okay, so he went on different websites. He can create them. He points to 2 ones, Candy AI and Cupid AI. So this tech guy is saying that if someone were to come up with a dating app that was for digital AI girlfriends, they could
This is
make
family
$1
radio.
billion.
I have 2 daughters, Lisa. I can't talk about AI
I don't
girlfriends.
Believe this?
It's terrible.
I don't know where this is going. I mean,
you
to
imagine?
Lisa's,
Wives on Saturday
to
night,
Lisa's
the
good
AI
point.
girlfriends on Friday night. We get it.
Damien, help me here. I get, this is
dating
like a
app with
Mandeep
AI?
Singh thing. I get AI for ChatGPT, and the computer people tell me it's like a whole new world after all.
Yeah.
But other than that, aren't we just searching around for things that maybe will stick to the wall?
You know, I have to say, I mean, there was a big take on the terminal. I don't know if you caught it, Lisa, Tom, about sextortion scams and driving teenage. I don't want to get all dour here, but it's a real serious thing, and you got to read this article. It's about driving teenage boys to suicide. I mean, Nigeria, like these guys are basically pretending to be girls, reaching out to young students, high school students, and causing them to do some really awful things. It's really terrible.
And
Anyway,
draining their
got to
bank
read it. It's a big
accounts.
take on Bloomberg. It's on top.
Okay, there's the newspapers today. Sort of, that was a different one. I mean,
AI girlfriends.
well, I'm not worried more about bubble tea. That's more the reality. All I know is Lisa Mateo drove the market higher with our newspapers.
Oh, look at
Futures
that.
up 16, Dow futures up 259, and VIX under 19. Jess Metton came in. She said, Tom, Stones, Satisfaction. We're doing Satisfaction, the Shirelles, off of the miracle the Stones wrought.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney, Bloomberg Surveillance. Yes, economics, finance, investment. What a show yesterday on international relations, working all through the weekend to bring you that perspective on the Eastern Mediterranean. Paul Sweeney off with Alex Steele today. They will be with you at 10 a.m. from the Bloomberg NEF conference. It is our lead conference on hydrocarbons, on energy, and we'll have that for you. Damian Sassar agreeing to sit in with us for the next 2 days, and perfectly timed as well. Damian, unquestionably across economics, finance, and investment, dollar strength changes the debate.
Yeah, if you look year to date, now of the 22 major emerging market currencies, just one, the Mexican peso, is up on the year in dollar terms.
It's just fascinating to see here. Bloomberg Surveillance this morning, we're brought to you by CohnReznick. Of course, CohnReznick Advisory Assurance Tax. Let CohnReznick's enterprise risk advisors help you build confidence in your supply chain using data analytics. Visit CohnReznick.com. CohnReznick, CohnReznick.com. We're out on Apple CarPlay, the Bloomberg Business app. We're on YouTube. You search Bloomberg Podcasts. There's a live chat, very active, really pleased with it. Thank you to the gentleman who just said, could you just get Mark McCormick on? I love, folks, when you ask us for guests, because usually my little brain can't get there. Mark McCormick at TD is fabulous on dollar, and he has been dead on dollar resiliency. That's a brilliant suggestion off of live chat. One more question as our guest sets up here. Damian, if I see dollar strength as well, if we have an election and if Mr. Trump's elected, you know what he's going to say. We got to drive that dollar weaker.
Yeah.
Can a president do that?
Yeah, I think he could try. What I think is notable here about the price action in currencies is the fact that while the dollar is rallying, it's even rallying versus the Japanese yen in a sort of safe haven bid. You would have thought that the yen and even the Swiss franc would actually do okay, and they just, specifically the yen is rolling over here.
This is a joy, and for Global Wall Street, this is without question our interview of the day. Well, let's do this. Let's get the data in first. Lisa, I was going to go to David Hunt, but let me go to Lisa Mateo with the Bloomberg Business. David Hunt needs a data check. Lisa, please.
He does. And we've got green on the screen right now. This is after the major averages ended with losses to start the week. So we have Dow futures. They're up about 0.6%. S&P futures up 0.2%. NASDAQ futures up about 0.1%. The 2-year yield at 4.94%. That's up about 1 basis point. The 10-year yield at 4.63%. And that's up about 3 basis points. To commodities, gold. Citi actually saying gold will hit $3,000 an ounce over the next 6 to 18 months. Right now, we'll check in with spot gold. It's lower at $2,372 an ounce. We have Brent crude at $89 a barrel, NYMEX crude at $84 a barrel. On the economic calendar for today, reports on housing starts, building permits. That comes out in about a half hour from now. And then we have industrial production. That's about less than an hour later from that. Earnings, yes, it is earnings season. So far, we've heard from Bank of America. They're down about 0.5%. Morgan Stanley up about 3%. Bank of New York Mellon up 2%. And PNC, they are down 0.5%. That is your Bloomberg Business Flash. Tom and Damian.
This is a joy. And for Global Wall Street, this is the conversation of the day. It is rare that you are in the consultancy game. You know, you do Princeton engineering, you get some Parchment graduate, you end up at McKinsey, you do that. You end up running the asset management franchise, and then the rarest of rarest things, you actually go out and do it.
Yep.
Because like Prudential was like, yeah, okay, Prudential, and then they became PGIM, and then they started with total return excellence. The guy driving this ship is David Hunt. He's the Chief Executive Officer at PGIM. We're thrilled he's with us today. I can go for like 2 hours with you. So get comfortable.
Let's go, Tom. It's great to be with you.
Where is the bond?
You say I finally have a real job.
Yeah, you got a real job.
Sounds like Ken Griffin.
Where in 5 years is the bond debt world? I don't understand active management versus what the passive world's going to be, and ETFs. What's Greg Peters going to be doing in 5 years at PGIM?
The good news is Greg's going to be really busy because bonds are back, and I'm really glad you asked it in a 5-year context, because I think that's the right view to take. There are both near-term reasons why we believe bonds are back, which are just the higher yields, and as we begin to get a little bit of duration back into this, we'll see a lot of money shifting from money market funds. But the real structural shifts that are happening are actually probably more important to the 5-year view. And that is that retirement assets, pension assets, when rates go up, become better funded. And they actually then move to de-risk their portfolios,
right.
And that means moving money significantly into fixed income.
The blunt instrument here, and I can go back to John Templeton 30, 40 years ago, and I can go to Larry McDonald's essay of last year, is the wall of money that's out there. Your smartest people at PGIM, where is that money going to go? I think that's the great mystery right now. Again, over 5 years, where does trillions of fear money go?
So the good news is it's going to go back into high quality fixed income assets in the public area, and I want to talk about the private area too, because a lot of it is going to go into private assets. But in the public asset pieces of this, you mentioned the wall of money, but a lot of this is retirees, right? This huge demography change, which is happening not just in the U.S., but all around the world. They need decumulation products, and they need income products, and that means fixed income.
And Damien, I can't say enough, McKinsey Global Institute, what they've done on the failure of global retirement systems is just stunning.
And they're absolutely right.
Yeah.
We are in no better shape than we were 20 years ago in this move to DC. And so we at PGIM are working really hard to make sure that there is a very big suite of decumulation and income products available to people who need them as they hit 75.
Well, I mean, let's tear up the scripts here. Let's talk about choice. Choice for investors, choice for retirees, choice for active managers, for passive choice. You know, I'm looking at the the Bloomberg Global Aggregate Bond Index. Sorry. Down 4 I used to work at Lehman Brothers. Down 4.3% year to date. If you look at it by subclass, by currencies, there's only one subclass by currency that's up on the year, and it's only by a handful of basis points, and that's China. So let's talk about choice. What choice do fixed income managers have if everything's in the red this year?
So they need to take the longer term view. I think taking something on a 3-year basis is not all that useful. Really, when people have their retirement savings at risk, they are looking at an ability to meet income payments over the next 20 years. And so they need regular income as well as whatever appreciation can happen in the bond portfolio. That's a different construct. So when you ask me, what are our portfolio managers going to be doing? They are going to be spending as much time on decumulation and income as they do now on the accumulation phases of this. But they're going to be every bit as busy.
David, we all have children. I have 3 myself. You know, we're not supposed to pick favorites, but, you know, Hayden, my 12-year-old, you're my favorite. Kathy Hepworth, Greg Peters, Robert Tipp, who's your favorite? No, I'm just kidding. Don't answer that question. But seriously, such smart people there. Talk to us about the quality within PGIM, about retaining, hiring, keeping that type of talent there, and giving them an environment, a culture to make the right investment decisions for their fiduciaries.
So I'm really glad you raised that, because it is the secret sauce, right? In order to be a successful active manager, you need to both be right, ultimately, in your investment thesis, and you need to be non-consensus, meaning it can't be priced in now. It's easy to be okay on one of those two. You need both. And you need a culture, therefore, that actually supports that. So you need to back people even when they're wrong for periods of time. And most corporate cultures can't do that, right? You need an investment culture that values and wants non-consensus views and then backs people that have it.
Our running joke is the only way you snag Porcelli is the Hinkley picnic boat, the 40S. And he comes down, Porcelli comes down to
You can find him on 55 Locust in Greenwich, Connecticut.
He comes down the picnic boat every morning just to come up to the dock at PGIM is, well, do you guys have a consensus view now, or is it like PIMCO where you're like fighting and arguing and screaming in a 10 a.m. meeting about where the view goes? How do you run
we do both, right? We absolutely believe that at the end of the day, people should argue for their views, and those views are divergent, and they should be. And we don't see that as a problem. We actually think that's a strength. But we do, at the end of the day, have to position portfolios.
I got to squeeze this in as a chief executive officer. Work from home, work from office. Where are you?
So we went quite early in all of this to our culture is a talent organization, and we need mentorship, we need creativity, and we need people to be together. And so we're going to do that 3 days a week, and we're going to be in the same 3 days a week. And so we declared that early.
Make some news here. Where are you in 12 months? You going to go to a 4-day, 5-day, 6-day a week in the office?
So I'll be honest with you, Tom. 2 years ago, I had in our employee survey, I had 1,000 questions on back to the office.
Right.
This year, I got 12.
Okay.
It's a finished issue for us. People feel like we've gotten a good balance.
Don't be a stranger. I want you to come back and talk about engineering at Princeton. David Hunt, CEO, PGIM, thank you so much. Be sure Porcelli's got he's warm enough in this.
I'm going to work on his golf game.
Chill going down the Hudson River. David Hunt, driving a picnic boat for Tom Porcelli as well. With our news in New York City, John Tucker.
All right, Tom, after Iran's weekend drone and missile attack on Israel, the question isn't if the country responds, but how. More on that from Bloomberg's Rosalind Matheson.
There's a wide range of possibilities here, from a direct attack, as you say, from Israel on Iran. That would not be unprecedented, but that's one option for them, targeting military sites, perhaps even nuclear sites in Iran. Of course, there's a lot of concern about Iran's nuclear program. Or does it go for something instead, like going for one of Iran's proxies in the region? We're talking about the Houthis in Yemen. We're talking about Hamas in Gaza, Hezbollah in Lebanon. Do they go through one of those proxies to retaliate?
Iran's deputy foreign minister is warning any Israeli counterattack would be met with a more severe, faster, and immediate blow. House Republicans will walk the articles of impeachment against the Homeland Security Secretary Alejandro Mayorkas over to the Senate today, kicking off a trial in that chamber. Republicans accuse him of mishandling the crisis at the southern border. The Senate Majority Leader, Chuck Schumer, has made it clear he wants to make quick work of this impeachment. He can move to dismiss the charges or hold the trial not on the Senate floor, but in committee. Vice President Harris returning to the campaign trail to underscore the stakes of the election once again. The VP speaking in Las Vegas a week after the Arizona Supreme Court upheld an abortion ban from 1864.
What we are seeing in these states that we are talking about are Trump abortion bans, and he can't get away from that.
In the wake of the Arizona Supreme Court decision, now California bracing for an influx of women seeking abortions. And the Supreme Court will weigh the legality of charges brought against hundreds of people in connection with the attack on the Capitol. The question for the justices is whether a law passed as part of the Sarbanes-Oxley financial reforms can be read to cover the January 6th riot. Global news, 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Damien,
John Tucker,
Lisa.
Thanks so much. Really, really interesting going on here. We got a lift in the equity market, of course, very, very different than the angst that we saw yesterday. And again, thanks to Admiral Stavridis and Ian Bremmer and others for being with us. And I guess it's sort of back to more normal, but as you look at the screen, is one thing. Damien, we haven't even talked about this. I got a 10-year real yield.
Yep.
Back umpteen years, 2.21%. How do you do business with a 2.21% 10-year real yield?
You go to the tips market, right? Because it's got on the flip side, it means that break-evens are probably undervalued here. So, I mean, maybe you carry in I heard the tips, you actually can carry in tips. You get positive carry for going a little bit further out on the curve. It's not a bad idea to do that.
Inside Baseball with Damien Sassowers. Please stay with us on Economics, Finance, Investment. Good morning.
Breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Brokers Studio, I'm Lisa Mateo. Futures are on the rise. Right now we have Dow futures up about 0.5%. We have S&P futures up 0.1%. NASDAQ futures, though, they are little changed right now. The 2-year yield at 4.94%. That's up about 2 basis points. The 10-year yield at 4.64%, and that's up about 3 basis points. To commodities, we have spot gold lower at $2,374 an ounce. And over to oil, Brent crude $89 a barrel, NYMEX crude at $84 a barrel. To earnings we go. Johnson & Johnson just down just under 0.5% right now. First quarter profit beat estimates. Drug sales came in higher than Wall Street expected. And then we have United Health Group. They were up about 7%. First quarter profit beat expectations, also affirmed its outlook for the year, and that's despite the costs from that cyber attack that they suffered from. And some news from Microsoft, up 0.2%. The company will invest $1.5 billion in G42. That's the UAE's top AI firm. That is your Bloomberg Business Flash. Tom and Damon.
You know, Lisa, I was getting sentimental there after the newspapers as well. I mean, you know, like a substantial foundational cash flow of the Keene household went to Boba Mosa on Madison Avenue, and I'm clicking in here with the kumquat lemonade at $5.25. I mean, the cherubs were out the door, lined up halfway down the block for this stuff. They're not in business anymore. I don't know what happened to them, but you know, but the Boba Mosa thing's got to go away.
It's a lot of money.
It really adds up.
But the kids love it. I'm telling you, they're like addicted to it. They always want it.
And then they bring it home. They get this ginormous size. They bring it home. They put it in the refrigerator, and it sits there for 3 days.
Oh, got to throw it out. Toss it.
Thank you, Lisa Mateo. We're playing off the newspapers there. If you're not in the last segment, I mean, newspapers was especially strong today. This is a joy. He's usually in Los Angeles. You know, he's like, what's Mookie doing? What's the Dodgers doing? He's worried about Hollywood, the future of Paramount, and all that. Sri Kumar is truly one of the guests people lean forward and listening to. He was iconic at TCW for years, and of course now Sri Kumar Global Strategies. And it's just simply on the economy, but with a different take. What is your distinctive take now, a wise one, versus the consensus view?
I have stuck to my view, Tom. The consensus view, as you know, has been first 6 cuts, 7 cuts in interest rates during 2024. Then it came down to 3 for sure. First cut was going to be in March. No, but it's going to be June for sure. And I even wrote saying they should be increasing the interest rate, not talk about how many times to cut.
So the change that we've seen in the last 2 weeks, do you suggest we could see a shock interest rate lift because the real yield is getting out where it is?
Exactly. I think you should be increasing interest rates at this time if you really want to kill inflation. But there are political reasons not to cut interest rates. This is an election year. And I look back to what happened to the Nixon re-election campaign in 1972. Arthur Burns, whose path right now, Jerome Powell seems to be following, followed a policy which was intended to make the Richard Nixon re-election possible. And look at the way it is. You can't cut interest rates too soon because inflation is too high. It's tough for the Fed to explain why they are doing it, especially when they lost credibility with the transitory inflation argument in 2020, 2021, okay? But then can be cut closer to November 5th? No, you can't, because that'll be called politicized action making. So how they are going to face it, Tom, is clearly not clear. It's not clear to me at all, and that's where I come.
Sri, when you leave in the morning from your home up in Malibu, you take the PCH down to Santa Monica, Shutters, great place. You know, and you're thinking about this, and you're thinking about channeling Arthur Burns, and you're thinking about Arthur Burns and that stop and go policy of the 1970s. What does that mean for fixed income investors? How do you manage your duration risk in that type of an environment?
It is very difficult to manage your duration risk. In other words, you're going to be either very good as a trader managing your duration risk, or you're going to be very bad and you're going to lose a lot of money. It's not clear which way you're going to come down to. But the point is there is no in-between because it's a very tough environment. What I keep saying, though, is that you can make money if you ignore the next 2 years. you're saving for your retirement, you're saving for further education or for living, then you can ignore all the changes in the short term. And there I would come forth and say that long-dated treasuries, despite the killing they have suffered in the last few days, is still a good place to go in. You know why I say that? The higher interest rates, the higher yields are going to kill some part of the economy.
Yep.
The banking crisis of March 2023 is going to look like child's play.
Yep.
Then, this is the history of the Fed. You say, I'm very much focused on bringing down inflation. Keep saying that until you create a crisis.
That's right.
Oh, I'm sorry, I have to save the system. And then I'm going to flood the place with liquidity.
John Williams was with us yesterday.
Blue button.
And of course, you know, the Detroit Lions blue button. John Williams was with us yesterday of the New York Fed. And the raging debate here is, and I think of John Taylor out at Stanford, we got to change the Taylor rule. We got to change the foundational dynamics of your academics. Do we have to? Can we work within the same theoretical and applied regime of 20, 30 years ago when you were at TCW or Drexel or that? I mean, or is it a new territory, Sri?
Thank you for asking. John Taylor, actually, I have one more connection. He was one of the 3 professors on my PhD committee at Columbia. So I'm very familiar with the Taylor rule and visiting him.
And this is Taylor at Columbia before he went out and got indoctrinated at Stanford. That's a
right.
joke. What are we going to do about the basic foundations of our belief, or do we have to find a new post-pandemic economic belief?
I think you have to go back to the pre-pandemic, long ago, 1990s approach to Taylor rule. And it was first proposed, Tom, in 1993. Janet Yellen, who was then in San Francisco, said she hopes that it can be adopted soon. And 30 years later, there is no progress toward it. So my answer to you, Tom, would be yes, you need the Taylor rule back. It is a very flexible formula taking into account whether your growth is above or below target, your inflation is above or below target, and based on that, should you be increasing or lowering interest rate. You put the formula out, you publish it in newspapers, speak about it on Bloomberg, and I will know what's going to happen to interest rate.
Right.
There's no mistake.
Damien, get a question in
Sri, I have to ask you this. You know, I mean, and to our audience, you know, Sri and I debate this offline. You were at TCW. Dave Lovinger, a China expert in the truest sense of the form.
Know him well. Good guy.
Talk to me about China. How can we even think about China? And is it even investable at this point? I mean, how can a U.S. dollar-based investor approach China in the current environment?
The way to deal with it, I think, is for you to have a small percentage of your portfolio which you can throw away, which you can afford to lose. And it is not going to be anymore a significant chunk of your portfolio if it ever was. Right. So what you're going to do is to say that if things work out, and if you have a regime, even with Xi Jinping, who somehow switches over to free market capitalism rather than controlling the communist system, there are no signs it's going to happen. That's why I say toss very tiny portion of your portfolio. That's the only way to approach it.
Look forward to the Milken Institute with Bill Lee out there, chief economist for Milken, and as a senior fellow, Sri Kumar. That will be an important event in Los Angeles. Sri, thank you so much. And yes, we'll feature Sri Kumar on Single Best Idea here today, our podcast that we'll be putting together. I mean, I think this stuff is brilliant, and it really goes back, and you got somebody, Columbia with Taylor ages ago, and Ned Phelps and the rest. Do we get back to that economics post-pandemic is a raging debate.
Well, I think that stop and start type of Fed, I mean, wow, that is going to be a very challenging environment for fund managers to operate in. I mean, if that's exactly what we're heading into, where the Fed might hike, it might pause, it might cut, I mean, that is tough.
I go back to the dual mandate. How can you be cutting rates with a sub-4 handle?
Right.
Unemployment. It just doesn't, and I get that there's an immigrant mystery here, a migration mystery here as well, but I just hugely
the pricing tree is just...
Actually, Lee talked to me today about the Fed Decides coming up May 1. We're looking for a great show there as well. Sri Kumar on fire there. Thank you so much from Los Angeles. Red and green on the screen right now, the VIX. Well, okay, I'm going to go with it. Deep under 19, 18.98. Thank you. Brent crude, quiescent, $89.73. On YouTube, Bloomberg Surveillance. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got red and green on the screen now. NASDAQ futures, they're a little changed, but we have Dow futures up about 0.4%. S&P futures, they are little changed. To the 2-year yield at 4.95%. That's up about 2 basis points. The 10-year yield at 4.65%, and that's up about 4 basis points. To commodities we go. We'll have COMEX gold at $2,390 an ounce. We have spot gold at $2,373 an ounce. And over to oil, Brent crude, $89 a barrel. NYMEX crude at $84 a barrel. Want to touch back in with bank earnings today. We've heard from Bank of America. Right now, those shares are up about 0.5%. We also heard from Morgan Stanley. They're up about 3%. Bank of New York Mellon, they're up nearly 1% right now. And finally, PNC, they are down 2%. In other news, buyout interest fading over at Samsonite. Sources are saying private equity firms, well, they think the price is too high, and that's going to clear their way for a dual listing. That is your Bloomberg Business Flash. Tom and Damien.
Lisa Mateo, thanks so much. There is housing data, and it is a miss. The revisions are actually constructed. That's about as positive I can get. But month over month, looking for negative 2%, and it came in negative 15% as well. The revisions just out are a little more constructive. But all in all, the housing market, a pause, Damien. I mean, you look at starts, you look at permits.
My wife's not going to be happy with this.
You know, month over month, it's like there. And I'm sorry, the bank rate mortgage, I looked at the fancy moving averages of a 30-year mortgage. It's not grim, but the vector's towards grim.
What is the mortgage fixed rate 30 now?
7.3 bank rate.
7.3.
Yeah.
That's why nobody's buying.
It's getting up there. And I mean, you know, again, this is a backstory into the Fed discussion, and we're going to do this in a bit. Our economic indicators support for all of Bloomberg Surveillance's economics, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. The CEO of Commonwealth, I think he ran the marathon yesterday in Boston.
Yeah. We had a little bit of an upward revision on the prior month, just so you know. So the housing data is not so bad. It's not brutal.
Revision as well. Industrial production, always interesting, coming up at 9:15. Greg Docker with us right now with EY. Greg, I just want to play off what Sri Kumar just said, which is the interest rate regime is so messed up with inflation rising and not any sense of transitory disinflation. Are you in any way modeling out a probability of a rate increase?
Well, I think we can't say that it won't happen. We know that there can always be surprises to the upside, but I would still think we're close to, we're close to the onset of the easing cycle more so than we are to another rate hike. We have heard some policymakers become a little bit more concerned with the inflation dynamics. I, for myself, continue to believe that the disinflationary momentum is well in place. Yes, the data has been a bit hotter than expected, a little bumpier than expected. But if you look at the underlying fundamentals that drive inflation, pricing power, pricing sensitivity, wage growth, productivity, those are all actually still quite encouraging. And some of the bumpiness that we've seen are in sectors that are perhaps less reactive to the Fed. Insurance cost, medical care cost, those are the types of things that may not necessarily react that much to the Fed staying higher for longer.
Surveillance, not correction, but we like to be up to date. We can do that with the Bloomberg Professional Service. Damien, the 30-year bank rate, 7.43%, out at 2 standard deviations, above late February, and that's taken that back to middle of December.
Wow.
Mortgage rates peak 8.2%.
Greg, I have to ask you this question. You know, we're looking at the CPI prints outside of the U.S. from last week. Mexico, Brazil, China, Taiwan, all weaker than expected. So to your point, disinflation is kind of taking hold outside of the U.S. But my question for you is, can diverging price pressures between the U.S. and the rest of the world really fuel that central bank policy divergence that we're calling for? I mean, can these other central banks actually cut in the face of a Fed on hold?
I think that's what we're seeing being priced into markets, right? We're seeing the dollar strengthen quite a bit against emerging currencies. We're seeing strength in terms of how the higher long-term rates in the U.S. are affecting the rest of the world. I think this tightening in financial conditions is something that we have to be keenly aware of, because in the past, this has led Fed policymakers to be a little bit more cautious about how they communicate their intent to tighten or ease monetary policy. So this is certainly something that we have to keep in mind, but I would not put it past the ECB, for instance, to start cutting rates in June as it has telegraphed, while the Fed stays on hold and perhaps waits a little bit longer to see more evidence of disinflation.
So when you get somebody smart like Greg Dacco, folks, talking about a tightening of financial conditions, what do? Good morning, Michael Rosenberg. You look at the Bloomberg Financial Conditions Index, and I didn't see this until Greg came up with that great insight, Damien. We've had a lot of tendency towards an accommodative policy.
Very much so.
And it is broken down decisively.
Really?
Back
I got to
to
bring that
early
up.
March, well outside 2 standard deviations. So we become a little more restrictive here. I see it in the 10-year real yield. I don't know where Greg sees it, but to his point, we have become less accommodative.
Well, Greg, let me ask you that question. We all know the components inside these financial conditions indices, right? And one thing that's not behaving, or that is behaving, shall I say, are spreads. So we know it's not spreads that are driving that tightening of financial conditions. It's got to be the VIX and equities, right? I mean, what is it?
Well, it's the VIX, it's equities, it's the dollar that is strengthening. And if you put all of those together, it is leading to some tightening of financial conditions. Now, in the grand scheme of things, this tightening has not been massive and has not reversed the easing that we had seen previously. So it's nothing alarming as of yet. But I'm sure policymakers are paying close attention to the fact that the 10-year yield is now above 4.6, that the 2-year yield is approaching 5%. These are the type of indicators that Fed policymakers have been increasingly talking about. They've been talking about the restriction from monetary policy, but at the same time, they've also been talking about the restriction from financial conditions. Lori Logan, of course, spearheading that discussion. But that is really something that we have to keep in mind when it comes to how rapidly the Fed may or may not ease. We're now looking for 2 rate cuts over the course of this year. We've moved that down from 3 with the onset in July and the second rate cut in November. But I think we still have to keep in mind that there could still be swings to the other side, to more easing if the data disappoints. Let's not forget, the Fed right now and some policymakers are playing it on a play-by-play basis. So each and every single economic data point has its own importance. Not sure that's the right approach, but that's what the Fed is doing right now.
Greg, I agree with your call on disinflation, but I need to push back just a little bit here. I mean, commodities have rallied across the board. They're up 4.1% year to date. Energy, 5.4%. Precious up 14%. Now industrial metals are starting to play ball here. I think copper had a huge week last week. How does this factor into your calculus in terms of looking at inflation? I know it's all about the core and, core exempt services, whatever. Talk to us a little bit about the impact of commodity prices. Is that something we should be concerned with here?
So first, to set the scene, I think we'll have core PCE inflation around 2.5% in the next month or next couple of months. So that would be the timing in terms of the onset of rate cuts. But you're absolutely right that these higher commodities prices, and in particular, the potential for higher oil prices, could put Fed policymakers in a bit of a bind, because the higher energy costs would not mean just higher prices at the pump, but also higher transportation costs that filter through in this supply fragile environment that we have. So that is a risk, because if you have this higher commodities price inflation that generates higher inflation, that puts the Fed in a bit of a bind, because it's contractionary for economic activity, but at the same time inflationary.
Greg Dacco, thank you so much. EY Parthenon, greatly appreciated on the economy this morning. Green on the screen here, a lift here. Futures up 11, Dow futures up 243. The VIX from that stressful 19 level comes into a better statistic, 18.67. The 2-year yield, 4.93%. With our news in New York City, John Tucker.
All right, Tom, thanks. Middle East tensions may be ramping back up. Israeli military officials are saying they have no choice but to respond to Iran's drone and missile attack over the weekend. The U.S. and European allies are urging Israel to avoid the kind of tit-for-tat that could spark a wider war. Here's State Department spokesman Matthew Miller.
Israel is a sovereign country. They have to make their own decisions about how best to defend themselves. What we always try to do is provide our best advice as a longtime friend of Israel and a longtime ally and partner of Israel. And that's what we've done since October 7th across a broad range of fronts. It's what we have done over the weekend.
The Biden administration has put more than 500 sanctions on Iranian entities to hold Tehran accountable for the attack. The turmoil in the Middle East adding new urgency to passing foreign aid in the House after months of inaction. Bloomberg's Ed Baxter says votes could come this week.
Speaker Mike Johnson is planning separate votes this week on new aid to both Israel and Ukraine. This in an attempt to assemble fragile coalitions to speed weaponry to both places.
We have terrorists and tyrants and terrible leaders around the world like Putin and Xi and in Iran, and they're watching to see if America will stand up for its allies and in our own interest around the globe, and we will.
Now, his party majority is very slim, and he may need Democrat support, and he very well may get it. The impasse over aid has been dragging on since October. Ed Baxter, Bloomberg Radio.
And the Supreme Court will weigh the legality of charges brought against hundreds of people in connection with the attack on the U.S. Capitol. The question is whether the law passed as part of the Sarbanes-Oxley financial reforms can be read to cover the January 6th riot. Hundreds of people, including Donald Trump, have been charged with obstructing an official proceeding. But defense attorneys argue the statute refers to documents and congressional investigations, not the counting of electoral votes before a joint session. The Biden administration will argue and urge the court to read the law more broadly and allow the prosecutions to stand. And another body recovered at the site of the Baltimore Highway Bridge collapse. It was found in a construction vehicle underwater. The FBI, meantime, says agents boarded the container ship that crashed into the span, causing the collapse. They're looking for any evidence of criminal wrongdoing. Hours before leaving port, the container ship reportedly had electrical problems. Global news, 24 hours a day, whenever you want it with Bloomberg News Now. I'm John Tucker, and this is Bloomberg Radio. Tom, Damien,
Michael
Lisa.
Barr, not with us this week, and he would speak of Ernie Harwell and the Detroit Tigers. I
was just
speak
gonna
of
say
my
that.
Ute and Kurt Gowdy at the Boston Red Sox. Before Kurt had huge national fame, he was the voice of my childhood. Let's listen to someone speaking about the judge.
Here's the 1-1. Swung on. There it goes. Deep left. It is high. It is far. It is gone. Number 62 to set the new American League record. Aaron Judge hits his 62nd. All the Yankees out of the dugout to greet him.
John Sterling. Damien, he retires at the young age of 85. I
iconic.
Listen to him, just listen to him, even with the dreaded Yankees.
He's going to be missed. I mean, absolutely iconic. I don't know how I'm going to listen to the. Well, I guess they have Michael Castle. You know who I remember? Phil Rizzuto, the scooter. God, I love the scooter. Love the scooter. John, who is your favorite Yankee broadcaster?
I'll just tell you, Connell McShaney used to work with us. He had interned with the two of them in the Yankees booth and said it was hilarious, and they were both nuts in the greatest way. Yeah. So it's just like it must have been a joy working with those two guys.
Legendary. He's going to be missed. I mean, it's going to be it's heartbreaking almost.
I look at the new generation, and there's some that I just adore. I'll leave them out right now, and there's others that are just, they don't have the passion. We have to be careful.
The chops.
We have to be sensitive and like this, and I'm like, no, you got to be John Sterling. You got to have some emotion to it. John Sterling, of course, always associated forever with the New York Yankees, particularly back to the 1990s when the Yankees won. I thought I'd get that in there.
Okay, I mean, it's nice to see, you talking about the Yankees when the Boston Red Sox are having a little bit of a harder time here.
Wait, did you see their
6-0
unearned runs?
Shutout.
Errors, unearned runs.
I know. But look, I mean, the Red Sox, it's early in the season. I think the boys up north are going to make a run here.
I think it's time for me to buy an Orioles jacket and say, I love the Baltimore
At least
Orioles.
You got the Celtics.
Futures up 14, Dow futures up 271. The VIX does better and better, 18.41. We're watching the bond market this morning. 2-year yield, Damian Sassar on that minute by minute. On the break, he's trading 4.93% on the 2-year yield. Stay with us from New York City, Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now we have NASDAQ futures up about 0.1%, but Dow futures up 0.7%. S&P futures are up about 0.2%. To the bond market, the 2-year yield at 4.93%. That's a little change, and the 10-year yield at 4.62%, and that's up about 2 basis points. Some more economic data coming in today. We talked about it. New home construction in the U.S. fell to the lowest level since August, and this is as consumers kind of wait out those high mortgage rates. Residential starts, they decreased 14.7% in March. Building permits, they fell more than expected too. Some companies making news. We'll start with Tesla. They're down 2%. Now, yesterday we heard the company was planning to lay off more than 10% of its workforce. Today, Reuters saying it's already begun, hitting the U.S. and China. And we have some layoffs at HSBC. Their ADR is down about 1%. Sources say it'll cut about a dozen roles across its investment banking division in Asia. That is your Bloomberg Business Flash. Tom and Damien.
Thanks so much. Gene Munster now with Deepwater Asset Management. Gene, thank you so much for joining us and to talk on Apple today. They got a May 2nd earnings report. I want to forget about all the gloom about China, revenue worries and that. Can they hold margins and continue to develop free cash flow, which has basically doubled since pre-pandemic? Can they still generate ample free cash flow growth?
The simple answer is yes, they can. They generate about $100 billion in operating income. And so this is about a $350–400 billion revenue company. They'll probably do about $95 billion this year. Free cash flow will be around $55 billion. So this is still a machine when it comes to, and I want to, I think I buried the lead relative to that data point about their free cash flow, is revenue growth. If you take what it will be in the March quarter, what they're going to report in a few weeks here, revenue growth over the past 8 quarters has been down, will be down 0.4% on average. So they continue to drive that kind of $50 billion plus free cash flow despite revenue being flat. I think it speaks to the strength of the business model that they have.
So I got to go back to use of cash and running a company for profit, not growth, which I think most of the media doesn't understand here. Gina Martin Adams, adamant we're going to see use of cash click in here. Are we going to see a use of cash bombshell from Apple?
I think that so first, this is going to be the period when they report their March quarter, they typically give guidance about what they're going to do in terms of expanding their buyback and their dividend. And I would expect an increase the buyback and dividend somewhere around $25 billion. So we're continuing to see them expand, and that's over a multi-year period. But the bottom line is I expect to continue to see that move higher. That's coming at the same time where we're going to hear more about their investments in AI. They, of course, broke the seal last quarter after a full year of not proactively talking about AI, and now they have this event coming up in June where they're going to announce some products. But those products come at a cost, and there will be an investment cycle here. And I think Apple investors should be aware of that investment cycle. What does it mean ultimately for the business in the near term is you have these gross margins kind of right around 40%. There's probably going to be a little bit of a step back in gross margins, maybe by 50, 100 basis points, about 1%. But I do think that we do need to factor in what they're investing in AI when we think about the context of the capital distribution that they'll announce.
Damien, pre-pandemic gross margin 38%, now out at a modeled 44%.
You know, I mean, Gene, we're a little over a week away from April 25th when Microsoft, Google, and Amazon report after the bell. But before then, this Thursday, we're going to see earnings from Taiwan Semi. Tom's favorite book, Chip War. I mean, Chris Miller. I mean, talk to us a little bit about Intel, AMD. What does China and all that's going on with the chip war mean to those companies, and how are their stocks expected to perform?
So I think Intel, they're two different stories. They're both within the context of chips, and in terms of when you look at what's happening in China, Intel has greater exposure relative to AMD from China. So I think that there is more of a headwind. Both of them are going to face a headwind, and specifically within China, some of these revised recommendations from the government puts Intel and AMD like 8th and 9th on the list of chip providers that they recommend. The top 6 are Chinese chip providers. So that is going to be a headwind. I think that's part of what has negatively impacted iPhone sales over the past year, is that there has been this spoken focus towards Huawei within government employees. It's a massive base. So I think this is going to have a negative impact on Intel and AMD. In our flagship Titan fund, we own AMD. We do not own Intel. We have sold Intel, not because of this China, but because of, I think, just some of the challenges that they have had. I think there is some managerial challenges that they've had just to try to capture some of those faster chips and to build those better chips. So big picture is this. China is going to be an issue. It's going to be an issue for AMD, Intel, Apple, Tesla. All of these companies are going to have to navigate this. It's going to get worse there over the next few years.
Gene, let's shift gears. Let's talk a little bit about M&A activity. Microsoft-backed Rubik is seeking up to $713 million in an IPO that just announced. Talk to us a little bit about the potential for M&A activity within the tech sector over the balance of 2024. Do you expect a lot more new issuance? I mean, what's really there? How deep is the pool?
So two pieces to that. First, in terms of the M&A side, is I don't expect much, in particular because the best companies already have valuations that are $5 billion plus. It's going to require some of the bigger companies to take action to be the acquirers there. And of course, given what's happened in the regulatory environment, I just see that less likely. Whether it's actually less likely to happen, I think I think the management teams feel that this is not worth to invest the time in that. So I don't expect a lot of M&A activity. I do expect, not this year, but in 2025 to be the first year where we're going to see a class of AI-first companies go public. Interesting. And I think that what we have seen, of course, with the move relative to AI, a lot of that value has been created with the mega caps, but we haven't seen really an AI IPO class yet, and I think we will see it. They can be from companies like Databricks. It can be obviously OpenAI, Anthropic. Some of these kind of the ordained AI companies likely will go public 2025.
Well, let me fit in this question. Does private money front run that public process?
Private money does. I want to be careful about how I answer this because, yes, the goal of private investors is to invest as valuations continue to increase into the public markets. That's how venture makes money. Of course, sometimes that gets turned upside down. And venture investors, we have venture funds too. It's a different investment style. It's more of tech visionary. We are not only tech visionaries, but we're also tech investors. I just want to make the quick point is that I think the mistake that a lot of venture makes is they just look at everything as being rosy and can oftentimes overpay. And there is a painful, look what happened with SPACs in 2022. There's a painful correction that a lot of those earlier investors. So I think that they're just as risky. Owning stuff in venture doesn't necessarily mean that it's going to go up when it goes public.
Thanks so much. Gene Munster, really, really wonderful comments here, particularly on Apple. Gene Munster with Deepwater Asset Management. Damien, to your wonderful question there on IPOs, I've got this nostalgia of yearning for an IPO market of another time. And to me, it's just gone. The business now is being 5 or 6 cute phone calls.
Round B, round C, round D, round H, round Z. I mean, that's where the action is. I mean, if you want, you can't get in at the IPO. You have to be pre-IPO.
Yeah.
If you want to make some money.
I just think that I'm as guilty of this as anyone. A nostalgia for the red herring, the road show, the merch bag.
The good old days.
The good old days. It's gone. Yeah. I mean, it's 6 phone calls, and like you say, it's the ballet of getting out front of the private money guys.
Yeah, well, I think that's technology and its impact, quite frankly, on the broader financial markets, right? Yeah. I mean, people have information. They know these companies before you needed the investment banks to bring them to market.
On Apple CarPlay, can't say enough about it, Bloomberg Business app, and also on YouTube, search Bloomberg Podcast. Jess Benton demanded it. Wall-to-wall satisfaction. They invented it. The Stones.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. Paul Sweeney on at 10 o'clock with Alex Steele, the BNEF Hydrocarbon Energy Infrastructure Seminar. It's a huge deal for NEF. And Paul Sweeney will be there leading our coverage at 10 a.m. And Damian Sassower. Rich, did you see how Damian stacked the deck here? Like he said, I'm not coming on. He had a Sassower tantrum, and he said, I'm not coming on unless we speak to ex-Lehman people.
That's right.
Is Dick Fuld with us here later?
Oh, I'd love to get we can talk commercial paper with Dick Fuld.
Yeah, I mean, Drew Mattis was with us earlier. We got Crescenzi coming up. For Global Wall Street, I mean, this is what it's about. Sassower pulls weight. They have Tony Crescenzi with us. We're going to get right too. And I mean, where's short-term for Damian Sassower? It's not commercial paper. 2 year?
I mean, enough 3 months. You don't look more than 3 months in this market.
5.x% T-bills.
Come on, you got to stay tactical, stay on your toes. I mean, I guess, I don't know.
Okay, this is domestic we're talking. We're not talking, Indonesia or something.
I mean, I think even Indonesia, really. I mean, look, I know it's a less liquid market there, Tom, but I mean, the way this market's trading, you really got it. You can't look much further out than 3 months.
3 basis points, 4.95%. I'm going to call it a 5% 2-year yield. We're going to get to Tony Crescenzi here in a moment. On Apple CarPlay on YouTube, search Bloomberg Podcast. We are humbled by the intelligence of a live chat out there, including song ideas and Bobo Mosa and the rest of it. From the Interactive Broker Studios, our Bloomberg Business Flash. Lisa
Looking forward to all of that. Good morning. Right now, futures. We have Dow futures up about 0.4%. S&P futures up 0.1%, but NASDAQ futures, they are a little changed right now. The 2-year yield at 4.95%. That's up about 2 basis points. The 10-year yield at 4.65%. That's up about 4 basis points. More Fed speak later this afternoon. Chairman Jerome Powell speaks in D.C. alongside the head of the Bank of Canada. And then meanwhile, you have the Fed's John Williams and Mary Daly said there's no rush to cut interest rates, but they still think they can move this year. We've had some more bank earnings out today. Morgan Stanley, they're up 3%, posted better than expected first quarter revenue. Its wealth management business got back on track. And then you have Bank of America. Their traders, they notched one of the best quarters on record. The company also reaped the benefits of elevated borrowing costs. Those shares up more than 1%. We also heard from BNY Mellon. They're up about 1%. And PNC, they're down 2%. That is your Bloomberg Business Flash. Tom and Damian.
Lisa, thanks so much. The Blue Book just out, the IMF. Of course, I'd trudge around Washington with my Blue Book, my Green Book, my Maroon Book, all the brilliance of the IMF. They raise their outlook. That's going to be the headline you're going to hear about, including growth leadership by the United States of America. But for the spring meetings, IMF saying the medium-term view is still that struggle worldwide. Joining us away from a longer view of economics and really on short-term paper, truly owns the high ground, Anthony Crescenzi with us of PIMCO. Tony, should I be nervous about a 5% 2-year yield?
Hey, Tom. Hey, Damian. No, you should be happy. You should be pinching yourself. You should be blissful. We haven't seen these yields in quite a long time. And it's one of the reasons why many people think that the U.S. economy is faring better. There's a story on Bloomberg today about it. Interest income in the United States is about $1.8 trillion today. That's up $300 billion from 2 years ago. It's $300 billion.
But the ambiguity is downplayed. I'm going to blame the media for this. Interest rates are
yes,
higher.
Of course.
OMG, price down, yield up.
Yeah.
But you know, and you've codified in all your books, including the great Stigham's, 2,000 pages, you've codified that there's an ambiguity here. Explain the ambiguity that price down, yield up can be good for our listeners.
Well, here's a statistic going back several decades. The 5-year, looking out 5 years in terms of what you're likely to get in terms of a total return, looking at the Bloomberg aggregate, which is pretty much a compilation of
SAS hours here,
Bloomberg
so we're
aggregate.
calling
Let
it
me
the
tell you
Lehman-
what that
yeah,
is.
the Lehman aggregate
Well,
here.
hey,
Continue.
by the way, on Lehman, I worked for Lehman Brothers in the 1980s in the World Trade Center, 104th floor, with a view of Uptown. Remarkable period that was.
Yes.
But so looking at the Bloomberg aggregate today, which is 40% U.S. Treasuries, 25% mortgages, 25% corporate bonds, the yield is 5.25%. Now, if you take that figure, that starting yield should be the return you get the next 5 years based on the 30-year history of it. The rolling return over a multi-year period should equate to what you see as a stated yield today. So 5.25%, is that good enough? For some investors, maybe not. That's why yields are rising, prices are falling, they're selling. They think yields will go higher. But I would suggest to investors that they be careful about the story now, and what I would suggest is thinking about 3 don'ts about what to do in terms of investing now. We're often asked about what to do. Here's what not to do.
Right.
For one, don't try to time the market. Awfully difficult to do. Secondly, sure, perhaps don't catch a falling knife, but do catch these yields while you can. These yields could slip away. And finally, don't fight the Fed. And Tom and Damon, you might think this means, well, the Federal Reserve is keeping policy tight, so it's a bad thing. But it's tough love. The more it stays tight, and it is getting tighter based on a definition of what is tight, a falling inflation rate, and it is falling, a 2.8% PCE versus a 5% yield.
Right.
They were almost equal last year. Fighting the Fed today means believing the central bank will be successful in its quest to bring inflation down. It has every means of an ability to do that.
Tom, did you see Tony wink at me when he said, "Don't be a short-termist to actually invest for the long term"? I mean, he winked at me. He knows your act. I'm reading your note, Tony, and I gotta say, don't fixate on the Fed's 2% objective. Focus instead on the notion of "quote-unquote" price
one of my favorite ideas.
Stability. That reads like the South China Morning Post. Price stability. What is price stability?
Well, Damien, so I'm really old. Tom is much younger than me, but I recall a period before 2012, and I'm going to tell you what that means, when we didn't have a 2% price objective to go on. We had to go on something else. And what was that something else? A notion that prices are stable or they're not. So it was in 2012 that Ben Bernanke, the former Fed chair, implemented the idea of a price objective. Prior to that, called the 1960s, 70s, 80s, 1950s, what did an investor have to go on to drive prices higher or lower? They had to decide, are prices stable? Now, if we fixate as investors on the 2% target, you could miss a great deal of return in your investment portfolio. And many that have fixated on the 2% target in the past 6 months have lost a significant amount of investment return in their portfolios because we haven't gotten to 2%, but we might be achieving price stability, which Alan Greenspan and Paul Volcker defined as a level of price changes or degree of price changes that ceases to have an impact on business and household decision making. And that's where we're moving, and that's why the equity market is feeling better, because we're getting closer to an era of price stability, even if it's not 2%.
Tony, behind closed doors, some of the conversations I have with the people I know and that I respect, we talk about that 2% inflation target, and we try to determine what it would take for the Fed to consider removing that target. Now, I know it's far-fetched, but do you feel that the Fed in this environment can even remotely consider that if inflation stays persistently high?
It's highly improbable now. They can't walk back on the notion, especially with the inflation rate higher, because then market participants would lose their sense as to where the anchor is, because it's become ingrained in thinking. But again, as investors, we have to take a step back and decide, is the inflation that we're experiencing enough to get in the way of future cash flows for businesses, to pay you back at maturity, to pay the interest on your bonds, etc.?
Give us and this goes to economics, and I want to go to your Staten Island or Richmond County. I'm sorry, but if I'm at the Fed and I'm looking at Crescenzi Staten Island, it's a great labor picture. Overlying your brilliance in the financial space, is there this huge elephant in the room, which is the labor economy of America?
The story for the 2020s, which is a lot different than the 2010s, is a story of retirements and immigration, with retirements outweighing the immigration over the longer span of time. There's a shortage of labor, and the context is this notion of stakeholder capitalism, which is different than the notion of shareholder capitalism, which Milton Friedman shepherded in the 1970s when he said the sole purpose of a company is to grow its profits. No company can say that today. They have to be seen as a partner with the community, as seen to be helping with climate change, and also contributing to a diverse and inclusive workforce. And so in that context, it's more likely that companies, given that there's labor shortages, will want to share income more. And final stat, Tom, is think 1957, the biggest birth year last century. 65 and a half years later, they're receiving Social Security and retiring. And this wave lasts until the last boomer, born in 64, retires in the early 2030s. So we've got a shortage of labor that'll last a while. But final word is immigration is helping lift GDP potential.
Tony, thank you. He is with PIMCO. Tony Crescenzi.
Thanks so much for having me here today.
Books about grabbing the coupon is really what this is about. The VIX 18.66 shows an improving tape, a better feeling out there. The 10-year real yield, wow, 2.22 % With our news in New York City, John Tucker.
All right, thanks, Tom. Israeli military officials are saying they have no choice but to respond to Iran's drone and missile attack over the weekend. This even as European and U.S. officials boosted their calls for Israel to avoid a tit-for-tat escalation that could provoke a wider war. We get more on Israel's possible response with Bloomberg's Ethan Bronner in Tel Aviv.
The sense that the United States is back again, embracing Israel and sharing in its defense needs and so on is important to people here. It's the most important alliance that this country has. But, there's this kind of old debate here, which is, do we want to be loved by our friends or feared by our enemies? If we have to choose, we'll choose feared by our enemies. Now, the remaining question is hitting back the best way to be feared? And I think that's part of the debate, too.
Bloomberg's Ethan Bronner. President Biden hitting the campaign trail in his childhood home state of Pennsylvania. The campaign says the trip aims to highlight the differences between the president's tax and economic agenda and the policies of Donald Trump, who oversaw tax cuts for the wealthy as well as corporations. Biden's three-day trip includes a visit to Scranton and events in the Pittsburgh area. Wild weather is sweeping the central U.S. today with tornado watches posted across parts of Nebraska and Kansas, and an enhanced risk of severe thunderstorms later in Iowa, Missouri, and Illinois. At least one tornado was reported in Kansas in the last few hours. Another was suspected in Nebraska. About 2.9 million people face the highest risks. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm John Tucker, and this is Bloomberg. Tom, Damien, and Lisa.
John Tucker, thanks so much. So much going on here, and of course, all of it centered on the economic data. At 9:15, we've got some productivity numbers coming out in about 3 minutes. We'll give you that data as well. But along the way, it is towards the Fed meeting, and I can only say we've had a huge variance today in opinions out there, including Sri Kumar looking for a possible rate increase. I'd say that's a lonely view right now, but nevertheless, it's part of the fan distribution of what this Fed is going to do. We're going to drive forward that conversation, and of course, we do it on Apple CarPlay. We've got a whole new distribution model for radio. Thank you for listening on traditional radio across the nation, around the world. But I'll tell you, Apple CarPlay, we've been stunned at the usage here. This is in new cars, typically. It's like 80% of new cars have it. You download the Bloomberg Business app. It's free. And then you're on Apple CarPlay, and it's like this one button, you get to us, and it's safer and better, as Apple says. On YouTube, search Bloomberg Podcasts. I'm completely thunderstruck by the immediate success of this. Bloomberg Podcasts out on YouTube. Look for Lisa Mateo. That's the easiest way to get to our live broadcast. A couple other things out there as well. And there's a live chat, which has been very informative this morning. Futures up 7, Dow futures up 229. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, Dow futures up more than 0.5%. NASDAQ and S&P futures up about 0.1%. The 2-year yield at 4.96%. That's up about 3 basis points. The 10-year yield at 4.66%, and that's up about 5 basis points. To commodities we go. Spot gold lower at $2,373 an ounce. And over to oil, we have Brent crude at $89 a barrel. Currencies, the dollar weaker, Japanese yen weaker, euro, British pound stronger, Bitcoin, that's lower, down almost 1% at 62,754. To earnings, we'll start with Johnson & Johnson, just under 1%. Those shares, first quarter profit beat estimates. Drug sales came in higher than Wall Street expected. And then you have United Health Group, they're up about 7%. It reported first quarter profit beat expectations, also affirmed its outlook for the year, and that was all despite the cost from a cyber attack. And finally, some news from Trump Media and Technology. They're up about 0.5% right now. They say its social media network, Truth Social, plans to launch a streaming platform. That is your Bloomberg Business Flash. Tom and Damian.
Lisa, thanks so much. Industrial production out, CapU, which used to be gospel, less so now, pretty much on plan. I don't want to make much about it. Maybe manufacturing production a little more sprightly, not market moving here, but nevertheless, perhaps a more quiet tape, but I have no idea where we'll be at 2 p.m. this afternoon. Tom Keene and Damian Sassar this morning. We say good morning. Paul Sweeney and Alex Steele coming up from our BNF conference, I should say. Concert, yeah. It's concert. Alex is singing. Conference in Manhattan. Looking forward to that. This is a joy, and thank you, Eric, so much for getting Dr. Lee in. Julian Lee needs some explanation. He is in London writing for the professionals of the Bloomberg terminal, and we're kind enough to drag him onto the program here. And he does this with years of work for different think tanks, very much associated with the Middle East. He has a real steeped Middle East and Saudi Arabian history to his study of hydrocarbons. Julian, let me begin just simply. Why is oil not at $104 a barrel?
I think there's two reasons. One is that the Iranian attack on Israel at the weekend doesn't appear to have done a great deal of damage, despite the number of missiles and drones that were launched. And more importantly, at least for the moment, Israel has been persuaded not to react. Now, that may change, and there certainly seems to be pressure within Israel itself for some kind of reaction. But for the moment, the market is taking comfort in the fact that they haven't reacted, and there's no real sign of escalation at the moment.
With all your experience, does Israel have Arab allies?
Allies, I think, is a very strong term. I think what we have seen is that a lot of the Arab countries have come much closer towards normalizing relations with Israel. Saudi Arabia was the next in line that looked like it was going to normalize its relations. And there's also a lot of tension, of course, between the Middle Eastern Arab countries and Iran. So that sort of sets up, if you like, a three-cornered dynamic where the Arab countries are not necessarily desperately close to Israel, but they're not desperately close to Iran either. What they will fear is that any escalation of the conflict between Israel and Iran will inflict collateral damage on them, either through wayward strikes, wayward missiles, or through the agitation on the sort of the grassroots in their own population.
Julian, I'm going to pick up on Tom's question here. It does not appear to be the case that Israel and Bibi are going to back off here. So I ask you the question. I mean, our friends at SocGen are talking in the event of a U.S.-Iran conflict, oil prices go to 140, and they're putting a 15% probability on that actually occurring. What are your thoughts? I mean, where can oil possibly go if the U.S. and Iran join the conflict?
Well, I think that there are so many moving parts in this. I mean, firstly, the US, I think, has said so far that it won't back and won't participate in any further retaliation by Israel on Iran. So I think the US is going to try very, very hard to keep out of that. And as for the impact on oil, I mean, you know, we're in a situation so far where we've got a war in Ukraine, we've got the war in Gaza, we've got militant Houthis in Yemen firing missiles and drones at ships in the southern Red Sea. And the only production that has been lost in sort of 2 years of wars around the oil-producing region, the only production that's been lost is about 100,000 barrels a day from South Sudan, which has been lost because of a rupture on a pipeline in its northern neighbor, which is embroiled in its own internal domestic war, so the pipeline can't be replaced. We haven't lost any crude production yet. And I think that as long as any escalating conflict doesn't inflict damage on physical production capacity, the price rises may be more limited than some expect.
Well, let's stay on the supply side here, Julian. Talk to us a little bit about, you know, what's going on with Ukraine and Russia. I mean, Ukraine's now sending drones, going after oil facilities, refiners in Russia. How does that impact the equation?
Well, I think there are sort of two ways of looking at this. One is that Russia is a significant exporter of diesel fuel, and so if you start mounting successful attacks on Russian oil refineries, that has an impact on their ability to produce more diesel than they need domestically and therefore to maintain exports. So diesel exports may be where we really feel the pinch of this. In terms of crude, I mean, one of the arguments that a number of analysts have put forward is that, well, if Russian refineries get hit, they'll simply divert the crude to export terminals and they'll export less diesel, more crude. That may not be possible to quite the extent that many people think, and I wrote about that earlier today.
Sneak one in here, Damien.
Yeah, Julian, one last question here. Energy's been the equity market darling, up 14% year to date. Talk to us a little bit about, you know, whether or not all of this is priced in. I mean, where can equity performance go within the energy sector from here?
I think that, I mean, you know, I'll say this up front. Equity performance is not really my sort of route into energy. I look much more at the market and the geopolitics. But I think that, you know, we are seeing a period of elevated oil prices. It's quite clear that the OPEC Plus producers want to keep oil prices, if not where they are now, or perhaps a little bit higher, then certainly not very much lower than where they are now. That gives a floor for the value of what the oil sector is producing. And I think that's a large part of what has led to this more positive outlook. So if we continue to have a tight market, if oil prices remain at this sort of level, perhaps edge higher over the summer, that's probably going to be good for oil stocks over the next 3 to 4 months at least.
Yeah, this has been great. Julian, don't be a stranger. I know you're buried talking to terminal users and the pros that help us go each and every day. Dr. Lee is outstanding from Queen Victoria Street this morning. You know, I look at everything like 4 or 5 days ago, we were talking about Sanka. We got a huge response on lousy decaf coffee. We've had a huge response this morning in New York and frankly nationwide on this congestion pricing thing. And the arch issue is the confusion of it, Damien.
No, I agree. I mean,
there's a lot to learn here to be constructive about it.
I think you're only going to get hit once. That correction has been made. If you pass through you see the building, you see the infrastructure build along 60th Street. Anytime you pass through 60th, you look up in the sky.
There's a thing.
These things. There's these things there that are going to probably pick you up, pick up your license plates. It's pretty interesting. It's pretty ingenious, actually.
For all of you nationwide, thanks for putting up with this. It's Stockholm leading on this, and a few other cities. New York trying to be the first in the nation. Big issue here on the island of Manhattan. Futures up 3, Dow futures up 211, the VIX 18.65. I want to say continued dollar strength. We'll get some chat with Damien on that. Good morning.
opening bell report. And we have a special treat for you for today's opening bell. If you're watching on YouTube, take a special look. Bloomberg Media ringing the opening bell. We're celebrating Bloomberg Media's partnership with NASDAQ. It brings that real-time U.S. equities data to Bloomberg.com using NASDAQ's last sale plus data product. So you can take a look. You can see we have Karen Salsa there, CEO, Bloomberg Media, and we have Julia Beiser, Chief Digital Officer, Bloomberg Media, along with a crowd of folks. So congratulations there. All right, over to the opening bell right now. We have the S&P 500. It is little change. We have the Dow. That's up about 0.5%. The NASDAQ right now, it's ticking in at just under, down about 0.1%. Over to the two-year yield at 4.96%. That's up about 4 basis points. And we have the 10-year yield at 4.68%, and that's up about 7 basis points. Want to hit commodities? We have spot gold lower at $2,376 an ounce. Brent crude, $89 a barrel. At the open, have to check in with big banks. We have Morgan Stanley up 3%, nearly 4%, and Bank of America down 1%. That's your Bloomberg opening bell report.
What's great about Karen being down at the NASDAQ, and I don't know if she knows this, they took a cast of hundreds down there. They're the ones that all eat Cheez-Its up in the food court. The media crew, these guys are animals.
They get lunches. Their catered lunches are delicious. I go down to the third floor to steal their food while they're in a meeting.
They're in a different world than us. They keep, animals like me away from them. But Karen,
why don't we get the look to go down to the floor?
Karen's driving the ship, and their lunches are better than our lunches.
Much better. That's really good. Grilled chicken Caesar wraps, the real thing.
Congratulations for opening the NASDAQ today to all of Bloomberg Media. Julie Beiser and Karen Salzer helping out there, doing a lot for Bloomberg.com and events.
Have you ever rung the bell before, Tom? Have you ever been down there?
We have had the honor, I'll tear up, Ken Pruitt and Charles Pellet. They wanted me to do it. And I stood next to them and I said, over my dead body.
Why?
I said, over my dead body. Jim Cramer was throwing stuff at me from the CNBC studio in the pit. But I said, over my dead body, am I going to ring the bell and not Charlie Pellet? Charlie Pellet and Ken Pruitt were the sole. Charlie Pellet, of course, is Surveillance Europe on $5 a day correspondent. We're saving him for Olympic coverage. But did you ever ring the bell there?
I did. I actually had the rare privilege of ringing the bell at the New York Stock Exchange with the former president of Colombia, Von Duque. It was actually a really wonderful experience. You go up before into this beautiful auditorium, this kind of private room, and by the way, they have good food there also. I'm just going to say, a nice catered lunch there was delicious. Grilled chicken, stuff like that.
Mixed screen here. NASDAQ a little light. We'll talk about that in a minute. The VIX under 19, deep under 19, 18.97. But the yield place here, and what we learned from Anthony Crescenzi, I think is important. Crescenzi, let me just cut to the chase, Damien. Crescenzi's saying, take the coupon and say thank you.
No, yeah,
That's summary.
I would have loved to get to Tony in here a little bit more. I want to put my options hat on him. I want to ask him, in this environment with volatility spiking up here, is now the time where you turn and you shift to capital preservation, where you buy hedges, where you hedge it all up, you move to cash, you go to safe havens. Is now the time where you have to at least consider moving a portion of your portfolio into cash and doing something like that, Tom? I don't know.
We're going to have to see. Let's do a vamp here on the currency market as well. It's something maybe secondary to all the angst in America and what we're seeing in Israel and Iran. We're looking for Ethan Bronner on the watch in Tel Aviv, and we'll get more from Ethan Bronner through their evening as we go into night. But I'm sorry, you got a 106.23 on DXY. This is a new regime for the dollar, even if it's not dramatic.
Well, also dollar yuan. The PBOC did it adjusted the band a little bit today to the downside. So what does that mean? A weaker yuan, and I think that's kind of weighing on the Asian currency complex as well here. But you're right. The BBDXY, the Bloomberg Dollar Index, is up 4.2% year to date, and by association, emerging market local government bonds are down the same amount, 4.2% year to date. So a stronger dollar weighing on the hearts and minds of all our EM practitioner friends.
Then a basic question, and this goes, good morning, Bill Rhodes. Is Jerome Powell the central banker to EM? And my answer into the IMF meetings is yes, he is.
Absolutely. You can't fight the Fed. That's why every time we have somebody on here and they say we see this divergence in inflation, this divergence in terms of the manufacturing PMI growth, I just don't buy it. You can't fight the Fed. U.S. interest rates are where it's at. It is the number one the biggest exogenous risk factor in my mind in your portfolio, and you got to stay mindful of it.
Damien Sassar with us, Paul Sweeney. You're here for what, a week, 2 days, 6 days?
Couple days. But I'll be back sporadically throughout the summer, to our audience out there.
I don't think we got time to get this in this morning. We're going to get this in right now because I'm deficient of that. I so bad want Celtic Lakers. My oldest, cash flow, my oldest was born the night of the iconic Celtics Lakers game.
Yeah.
I mean, is there any chance
Showtime.
I get Celtics Lakers?
The Lakers are playing the Pelicans. Zion Williamson appears to be healthy. He's got a lot to prove, but I do think the Lakers. We're talking LeBron James here. I think the Lakers are going to get the play-in, and the Warriors too. Steph Curry. They haven't been anything to speak about, but I just can't see them not being in the playoffs. I think they're going to win as well. They're playing the Sacramento Kings tonight.
There's your NBA talk. Right now, joining us, Tom Ogner of Allspring, with a wonderful heritage out of Milwaukee, was strong. And what's so important about this discussion, folks, is this is our large cap quality growth discussion. Tom Ogner, do I stay with the winners of the last 6, 8, 10 quarters?
Hi, it's great to be here. We feel you can't ignore them, but you also have to realize how much concentration risk has really been gotten into these big indexes. It is amazing, and if I'm a client, that's where I'm really focusing on risk, is how much I have in 10 stocks.
Okay, so what do you have right now in your top 10 holdings? Are you at 55%?
No, we're less than that on our top 10, but the index is close to 55%. With the rebalance, it's going to go close to 58. But we're north of 40 right now, which is near an all-time
Okay, so
high.
that's, Tom, you've been doing this for years. That's clearly outside prospectus. How do you rationalize that to shareholders who bought a prospectus?
Yeah, no, we ourselves for sure are within the prospectus, right? And we follow that, obviously explicitly and do that. We communicate that with clients, but we're well less than what the indexes are. And again, really when we talk to clients, and I think there's so much pressure to go passive into index, well, if you want 60% of your portfolio to be in 10 stocks, I don't think that's what they signed up for. To me, it reminds me of an emerging markets type market, not the U.S. market, right?
Well, speaking of that, on cue, Damien Sassauer with Tom Ogner.
Well, Tom, I got to go there then. Nearly every strategist and analyst that I speak of dismisses talk of seasonals. Yet I'm looking outside. It's New York City. It's 70 degrees and sunny, and I can't help but think of these illiquid summer months kind of like emerging markets, right? So talk to us about how you position as you head into the summer of 2024.
Yeah, well, we start, obviously we invest in growth, but we always believe we can't ignore valuation within that. That's really telling you what investors' future expectations are. And, we're a believer, right? We're a believer that, the AI is transformative. We want investments there. Obviously, companies like an NVIDIA are going to be extremely important. But I also think you have to look at how AI broadens out. Things like software, things like data management, things like security, things like power.
Okay, Tom, we got to leave it there. I got some audio problems here. We'll get back. Tom, I want you to come back on in the coming days here. I think this is too important a conversation for people with real money in the game, real retirement assets in the game, this massive overweight that we see in quality portfolios. We have had a fearsome live chat discussion out on YouTube over Sassauer's wisdom. We're going to get to that in a moment. First, our news in New York City, John Tucker.
All right, Tom, Damien, Lisa, after Iran's weekend drone and missile attack on Israel, the question isn't if the country responds, but how. More of that from Bloomberg's Rosalind Matheson.
There's a wide range of possibilities here, from a direct attack, as you say, from Israel on Iran. That would not be unprecedented, but that's one option for them, targeting military sites, perhaps even nuclear sites in Iran. Of course, there's a lot of concern about Iran's nuclear program. Or does it go for something instead, like going for one of Iran's proxies in the region? We're talking about the Houthis in Yemen. We're talking about Hamas in Gaza, Hezbollah in Lebanon. Do they go through one of those proxies to retaliate?
Bloomberg's Rosalind Matheson reports the timing of an Israeli response also is not clear at this point. House Republicans are going to walk the articles of impeachment against Homeland Security Secretary Alejandro Mayorkas over to the Senate today. That will kick off a trial in that chamber. Republicans accuse him of mishandling the crisis at the southern border, Senate Majority Leader Chuck Schumer has made it clear he wants to make quick work of this. He can move to dismiss the charges or hold the trial not on the Senate floor, but in a committee. Meta Platforms Oversight Board investigating the company's handling of AI-generated deepfakes of an American public figure. This follows a surge of such images depicting singer Taylor Swift earlier this year. The board's going to evaluate whether 2 separate AI-created images depicting nude women posted on Facebook should have been removed under Meta's content policies. And another body recovered at the site of the Baltimore Highway Bridge collapse. It was found in a construction vehicle underwater. The FBI, meantime, says agents boarded the container ship that crashed into the span. They're looking for any evidence of criminal wrongdoing. Hours before leaving port, the container ship reportedly had electrical problems. Global news, 24 hours a day, and whenever you want it with Bloomberg News Now. I'm John Tucker. This is Bloomberg. Okay. Tom, Damien, and Lisa.
I mean, Lisa always monopolizes the live chat. Forget about it. SAS hour. I'm wondering if Damien will make this tea time at 10:22 with the way this show is going. Thank you, Matthew, for that.
It's 12:30. Okay. Let's be clear. No,
12:30. It's 12:30. Good. On the NBA, we had a fearsome response out on live chat. We all want Sixers, Knicks, but the answer is there's a play-in. Explain the play-in to people worldwide.
Right. So, I mean, it gets a little complicated, and I don't think we have the time to go into it. What I can tell you is this. The Heat are playing the 76ers. That's Jimmy Butler against Joel Embiid, and one of those guys
Whoever
is
wins
not
keeps going.
Right, and one is not going to be in the playoffs after tomorrow night, actually. So I find that just so depressing because those are 2 players that you love to root for in the playoffs.
Right.
But one of those teams is going to be facing Jalen Brunson and the Knicks, and if there's one person who has just been looked over for all these awards, for the Olympic team, for NBA first team, it's Jalen Brunson, point guard of the New York Knicks. What an absolute beast
Damien,
he's been.
Help me here. Knicks Sixers is like original 6 in ice hockey.
I think it's going to be Knicks Heat, unfortunately. Bam Adebayo and Jimmy Butler. I wouldn't count them out. The way they play when it comes playoff time, I mean, they're pretty awesome.
I don't know. We'll have to see here. The loser plays the
Bulls.
What
are they saying? I think they're wrong. They don't know what they're talking about.
I don't know. We'll have to see. That's our NBA chat for the day. Lisa, you got to help me out with that next time because you know more than I do. What do we know? We know we got red and green in the screen. We got a massive churn out there right now. John, we had a fearsome response to the congestion debate in this, the many mysteries. I mean, John, it's really not clear, is it, given all the litigation in their the reticence about the process?
You maintain, Damien, that I'm going to have to pay every time I go through one of those. It's not like a one-time.
I think it's a one-time.
Every 24 hours.
I think it's a one-time only.
Okay.
24-hour.
They can't gouge you, but yeah.
It's different depending on what time of the day you go. Like our overnight cruise will not have to pay as much as someone coming through the normal
Okay, if I get here
but
at
still,
3 a.m.
I was just going to say.
and then I leave at 3 p.m., do I get a discount for working really hard?
Okay, and the other thing I want to talk about here, good morning to all of you, is a construction boom on Park Avenue. Yes. I mean, you've got Fortress Diamond. And now we're going to have down at 52nd, 53rd Street, Fortress
Have you been down there? It's beautiful. Have you seen how good that is?
Yeah, but it's going to be finished in what, 2032, I think.
Hey, you're looking at the new John Sterling. I'll still be here. As the good John Sterling was for the New York Yankees. We did a shout out earlier, if you missed it, to the great John Sterling of the New York Yankees. He has chosen to retire here. It's 79 years old. We'll have to see how that goes. We got much more coming up. We had a titanic response yesterday to David Gura's big take. I can't say enough about it. Huge response. David Gura will be here on Israel and Iran. Please stay with us from New York, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Right now, we have stocks. Well, we have the Nasdaq down about 0.2%. Same for the S&P 500, but the Dow up about 0.3%. The 2-year yield at 4.96%. That's up about 4 basis points. The 10-year yield at 4.68%, and that's up about 7 basis points. More Fed speak this afternoon. We have Chairman Jerome Powell speaking in D.C. alongside the head of the Bank of Canada. But already, Vice Chair Philip Jefferson said he sees a steady Fed rate helping to push down inflation. Now, aside from the bank earnings, we've also heard from the likes of Johnson & Johnson. Let's get to that right now. Their shares down more than 1%. First quarter profit beat estimates. Drug sales came in higher than Wall Street expected. You have United Health. They're up 6%. Reported first quarter profit beat expectations, and it also affirmed its outlook for the year. That's despite those setbacks from the cost from that cyber attack. And later today, we'll hear from United Airlines. Right now, their shares down more than 1%. That is your Bloomberg Business Flash. Tom and Damien.
Thanks so much, Lisa. Greatly appreciate it. The Big Take's a huge, big project for Bloomberg. It is eclectic and interesting, and then sometimes it hits a resonance. It hits a response, which was made yesterday in all of the different news and discussions and comments that we had on Israel and Iran. With our leadership there in Big Take yesterday was David Gura, who understands the political maelstrom better than anyone I know. And Damien, to have Mr. Gura to have him walk into the building before
in
10
the flesh.
What's great is you're going out to your tea time. Gura's usually coming into the building. He's got to get the kids to school and all that. Please.
So, David, talk to us a little bit about Israel. I mean, your Big Take, obviously, yesterday. I mean, this has changed the playing field, changed the game. Is Israel losing the foreign policy battle, and can they use what just happened overnight to try and right the ship a bit here?
We are at such a fascinating and difficult moment, and the Big Take podcast features Ethan Bronner, our Israel bureau chief, and Nick Wadhams, our very fine national security editor down in Washington, sort of talking about what happened over the course of the weekend. And interestingly, what Ethan said was, this is kind of an opportunity for Israel to take a victory lap. We had this unprecedented attack by Iran, hundreds of missiles and drones launched toward Israel from Iranian and soil elsewhere in the Middle East, and by and large, they were all intercepted, so a victory for them. But now we see this vacuum emerging. What is Israel going to do next in terms of retaliation? And also, what does this mean, obviously, for the ongoing conflict in and with Gaza? So it is a precarious moment. I hope we conveyed that in the podcast yesterday.
So, David, before any of this happened, before October 7th of last year, Bibi was on the hot seat, right? Talk to me about how he's perceived domestically within Israel today, and whether or not they can leverage what just happened overnight successfully on the back of that.
He has this war cabinet that was created just after that attack on October 7th. So there is a push for Israel to defend itself, obviously, in the aftermath of what happened on October 7th. But you're right, he was in a very precarious political situation, in large part because of these reforms that he was trying to push through. He also has all these corruption allegations which continue to swirl around him, although less so given all that's happening here. What Ethan Bronner told me yesterday, it's so interesting. In that cabinet, in that panoply of Israeli officials, he's pretty much on the farthest left. You have a lot of folks to the right of him who are pressuring him at this moment to take a stronger stance and to retaliate more forcefully than perhaps even he wants to. So precarious position for the country, but also for Bibi Netanyahu himself.
The heart of Big Take is the quality of your guests who Gura brings in. So you got Nick Wadhams, who's seen it all. He's the only one that goes on Air Force One that doesn't steal stuff. That's how many times.
He doesn't take the M&Ms.
He doesn't take the M&Ms. And probably some of the people are walking out with the seat belts in the chair,
checking
not Wadhams.
their pockets. Yeah.
And Bronner, is legendary at the New York Times,
yes.
Now running the shop for Bloomberg in Tel Aviv. Do they, and frankly, David, do you see a cohesive and continuance of our policy to the Eastern Mediterranean, or does it radically shift the first Tuesday of November?
I think it's, as it is in every country around the world, an open question, obviously, what happens after the election here. And we saw a strained relationship between Donald Trump and Benjamin Netanyahu when Donald Trump was in office as well. So it's unclear sort of how that policy would change. We did see movement, of course, when Donald Trump was in power to move the embassy, a lot of rhetoric and stronger rhetoric in support of Israel. But it's unclear. And to your point, Damien, Benjamin Netanyahu's position is so precarious, it's unclear sort of what will happen come November in that country as well. But it's certainly I think galvanizing politicians in Washington to look at this issue anew. We're seeing that on Capitol Hill. Speaker Johnson saying he's going to bring forward several of these bills that he's been really sitting on for the last few weeks, foreign aid bills. So what's happened over the course of the weekend, I think, has sort of been a catalytic event in Washington to get Congress moving again, grappling with the seriousness of what's happened and how this might escalate even more.
David, I just have to get your temperature on this last point for me. It's a U.S. election year, obviously, and many people, believe that a vote for the Democrats is a vote against Israel, right? And vice versa, a vote for Republicans is a vote for Israel. What do you believe? Like, what do you think, or more importantly, what do you think is the reality out there? What is sentiment out there as it relates to Israel on a party-by-party sort of nature?
I don't think it's that radically the case, but I do think you're hitting on something, which is Democrats are having to navigate protests in their own ranks about what the policy is toward Israel and how this administration is dealing with that crisis in Gaza. We've seen how difficult it is for President Biden. Speeches have been interrupted. Events he's attended have been interrupted by protesters. There is a sense that he is not or hasn't been paying enough to the plight of the Palestinians as a result of this. So it's something I think the Democrats are very cognizant of and are going to have to navigate very carefully here.
Tell us about the big take. I look at the success of it and the ambition of it as well. Where do you want the big take to go in the next 90 days?
Well, you kindly said that it can resonate on the issues of the day, and I really hope that we're going to get to that point where that's happening on a very regular basis.
So today it's the play-in, the Sixers and the Heat.
Exactly.
You're going to do.
We're going to pull Damien before the tea time. We'll get Damien in for that special topper to the episode. No, I think that what I want is a nice mix of addressing the sort of broader context of the issues of the day, but also elevating and giving a wider audience to the very fine work that our colleagues here at Bloomberg are doing. So today's episode is going to focus on this very strong and sobering, frightening, scary investigative piece by Olivia Carville on a sort of sextortion scheme that's affecting teenagers in this country. The consequences.
I read it. It was it's scary.
Devastating.
It's really, really devastating. It's really frightening.
And I think to get that to a wider audience is important. We're going to be doing that as well, Tom.
David Gura, thank you so much.
Thank you.
Look for the big take. Look for it out on Apple Podcasts there with a lot of other Bloomberg issues. Mr. Gura with a really important piece. You can still go back and listen to it yesterday on Israel and Iran. Damien, we're closing out the hour here. I know you got the cleats on. Don't wear the cleats on the carpet in the food court. But, Damien, I just have to talk about the core issue, which is going back to Stanley Fischer in 1998, suddenly in EM. Gauge the word suddenly right now in terms of EM finance?
Well, suddenly, there's only one thing that's sudden in emerging markets. That's how the currencies react relative to the dollar. And so I think, we've been talking about it all morning long. This is a dollar story. This is about what would it take to derail this dollar strength. And, with, interest rate differentials in favor of the U.S., with growth in favor of the U.S., and quite frankly, if everything goes pear-shaped and everything goes wrong in the world geopolitically, whatever the case may be, that's still bullish for the dollar. So it's really tough as an EM investor to make a bull case in this market.
So let's go back to EM. And that would be Japan. I got Japan at 154, and I got Euro Yen at 164. They were supposed to intervene here. Let's just start simply with why did they not?
Well, I don't know if they have or have not yet. I know Indonesia overnight did intervene, actually. So that, to me, was kind of a precursor for what you might see out of the BOJ. But certainly, I do believe that it's just a matter of time before the BOJ is going to have to intervene to defend the 155 handle. And look, if they don't, where could we go? 160 higher? I think some of the guys who know better than I are talking about a 10% move in dollar yen from here. So, that would be painful.
What does renminbi do? They're clearly managing it. It's basically shut down, fully almost fixed within a collar by Beijing as well. Their shortest path here, even with 5.3% GDP, is depreciation.
They're managing it, but what they're doing is manufacturing gains for dollar investors who had the audacity to buy China government bonds. Local denominated CGBs are the only asset class in all of global fixed income and all of the Bloomberg Global Aggregate Bond Index that are up year to date.
The Gura College Fund is completely loaded with Chinese renminbi CGBs? Did you were listening to David? David, did you hedge that over in US dollars?
I'm taking a page from your all-cash, triple leveraged college. You're promoting this now.
David,
it's worked wonderfully well, Tom. I know for you.
I had a 2 and 20. Lisa wants to go to lunch. I had a 2 and 20 payout on triple leveraged all cash. This has been great. David Gura looking for the Big Take podcast. Damien, thank you.
Thank you.
Try to make par in a golf course. Otis, satisfaction.